Good morning. How is everyone doing? I've completely reconfigured so much of my desk in my office. I'm all over the place here trying to make sure, like every day making some kind of change, but I think I'm finally set up here. How's everyone doing? Good morning. Happy Friday. It is February 28th, last day of the month. And live trading as always, every Friday morning right here on Wolf Financial and Edgeful with Emperador Maximiliano. Of course, that's me. If you don't know, if it's your first time in the stream, welcome, welcome. We appreciate everyone that joins in, hangs out with us. Jump in the chat. Let me know what's on your mind, what's going on, your thoughts, what's on your watch list for today. That's probably my biggest question. What is on your watch list for today? There's I don't going into today is going to be very interesting. The good thing is we have a high VIX, so price will be moving as that until at least maybe if that crushes, then it'll calm down maybe later in the day. But VIX is high. Obviously, we've moved down pretty far. Let's just go to a daily chart. Let's just start out with a daily chart today. We've got a few minutes until the open here. Let's see what do we have going on. All right, well, as you can see, this kind of trend line that we had going here is no longer there. That's not fun from a technical standpoint, but hey, something to pay attention to. One of the previous all-time highs we had here on SPY, we come just under that. We do have a little bit of a volume shelf down here at 581, I think will be interesting. QQQ, which I watch even closer. Let me get over to that. Same thing, broke that trend line, couldn't get back to it, and have failed since. Previous all-time high on QQQ from last summer, we've broken under that. And if you look, this bottom right here, we're still above it. Do we hold this same low that we did back in January? I don't know. Time will tell. Looks like we're going to push through it right now as the market drops. Yeah, a couple minutes here to the open. Looking through my watch list. Let me make sure and get everything up here that I want to be able to see. Um, oof. I just don't see much that I'm excited about. I don't know about you guys. I'm looking here. I see a mixed bag, kind of some Mag 7 names slightly green. We are slightly red on QQQ right now on this pullback. Buy slightly green. We don't really have much of a gap. I mean, that gap should fill immediately with the open. So we should see an immediate gap. Yesterday's closing price was right here. It's kind of where we've hung out all night, right at this 500 level. I don't know. I made this point a little bit earlier. If you are not sure what's going on in the market, you don't always have to trade, right? I think that's one key point that could always be made. 1 second here. Let me see if I turn on this light. If this helps. Oh, fall down on the way. There we go. All right. We'll see what happens here going into the open. You guys know I don't like to trade right at the open, but we'll see if I had to pick a level. This 500 down here, we almost got to it last night. There was a lot of orders sitting down there last night. They're not there now. The biggest amount of orders on EQ is actually up at 950. I'm looking over at the book map over here. It's actually up at 950. Make sure. There's your opening bell. Options grower, good morning. Good morning. Welcome here. Let me get this tweeted out everywhere. We did take out that low from January. Nvidia down 1.5%. Microsoft and Apple basically break even. Google, AMD green. Walmart, of course, green. Costco green. Tesla down a little bit. Broadcom. Yeah, there's this 500 area was the area of interest yesterday. Let's watch that. Hold on. We also want to watch this overnight low right here, 520, 515. I don't know. There's nothing I'm really that excited about. Options grower, what are you watching today? Could be a slow type of stream. We'll see what happens. There's 500. I am tempted to take a bounce right here. But I really don't have much from here down. 350, but I'll try 500 with a tight stop. Let's see what happens. I couldn't even get it on my chart in time. There's a pretty big bounce. If we can get something like this. Risk 25 to make 45. And by the time I put it on my chart, it already pushes through. Bye-bye. Yep. I was trying to put the idea on the chart and I couldn't even get it going. Underneath it gets really rough down here. Let me see where we're at on QQQ. and SPY. Yeah, NFP levels is something I'm going to be looking at too. If we get down here somehow on SPY, if we get down here on QQQ, ooh, we gotta look in here and see. We have a gap, an unfilled gap to the upside. I wouldn't be surprised to come back at some point today and close where we started. I think that's probably going to be the roadmap, but we'll see. It's opening flush here. I really want to play a bounce play very soon. I just don't have a whole lot to go off of right down here, though. Oh, falling off the cliff a little bit. Look at that 30-point bounce. The volatility is high. VIX at 21. NVIDIA kind of just hanging out in here. What else is falling? Meta down to, ooh, Meta's down 1.5%. Oh my gosh, look at this bounce. That's what I was kind of looking for a while ago, but I didn't have a chance to even get it set up to go. That's all right. I don't like trading that early. Let's see. Let's take a look and see where our gap fill and stuff is going to be. Okay, up here, 500. I do think we come back up here. I don't know. What are you guys watching? It's quiet in the chat this morning. Quiet in the chat. What do we got going on, guys? I'm not gonna lie. I turned the slide off on, and I immediately regret that. 100-point bounce right there. Well, SPY filled the gap. Let's see if QQQ is going to fill the gap right here. Boy, that was a dirty dip right there at the open. We fill the gap right there. It's the gap fill. Now let's see if it pushes back down. And then I want to find a place to get long. Bros, what's Bros up to? Earnings pop, a little bit of a fade. Does it hold in right here? That's interesting. On Bros. Yeah, that's interesting. Very interesting on Bros. Hold on. I like that Bros chart from the higher time frame perspective. There's a few of those names that are in that same category that all have pretty strong charts right now. Your biggest volume shelf on QQQ that we bounce off of. I did not see. Okay. I've been engulfing. Not quite. I mean, it didn't really wick below it, and it wicked above it. But it's same idea, Jayhawk. Same idea. I mean, I don't want to get granular with it, but I mean, this closes above, then yes, I would go ahead and give it that category. I think you're going to retrace back down here somewhere. I don't know. It's still early in the market on a Friday. A lot of volatility, a lot of things happening. Let's see what happens. Baba puts. Oh, okay, Baba puts, huh? I don't hate that. Oh, big old gap down on China. Baba is such an interesting trade because those Chinese names moved with their market overnight in ours and then open up over here. So you almost have to swing trade those names. Baba puts. What are you looking for? Wait, 138 puts? Or you already had those? If you already had those, it's beautiful. Did you take those yesterday up here? So if you took those yesterday, that's beautiful. If you're taking 138 puts today, that's interesting to take those that deep in the money. All right. Big bottom wick on the 15 here on SPY and QQQ. Watch and see if this doesn't come back down to 550 area, maybe 534. It immediately holds the pre-market low right here, 560. I don't know. I don't want to be early to this trade, but I was trying to long 500 and give it 25 points. I should have given it more knowing the volatility, but I couldn't even get set up in time. I don't know if I trust this move. All right. Midpoint of the orb, we could try it right there. All right. I want this to happen right here. Pick a starter. See, my average is right here. All right, a little add there, lowered my average. I went very, very light. We have no, right there's my average. There we go. Oh, guess I should take a trim into 600. Volatility is wild. All right, well, I'm long. 536 average. Oh, beautiful. You took those at close. Oh, you're sitting pretty this morning, then. All right, little early trade here. Very, very light. Volatility is crazy, but we are up. Oh, we got 100 points already? All right, there's 100 points. I'm taking a trim. How about that for a start to the day? We do have to remember that this is a counter trend trade. Definitely got to be careful in these 650s up here. 650, 660. Make sure you guys trim. There's no reason to like swing for fences on a day like today. Also, there's no reason to have a stop down here below my average after trimming. All right, we have to watch out. We've broken previous day low, but we did fill the gap. We probably close red today. I mean, just the probabilities. I don't know. Today's a little bit different day. I think we might go against the data a little bit today, as much as I hate to say that. I'm not going to bet against it, but I am going to take into mind some of the context of what's going on here. I don't know. We'll know a lot more in about 15 more minutes. Chicago PMI data just did come out, 45.5. Forecast was 40.8. Previous was 39.5. Of course, Walmart's the market leader. Of course it is. It always is. Walmart's the best. I don't want to lose 550. Actually, I really don't want to lose. Let's see. Look at that bounce off that 520 I was telling you about earlier. Honestly, I don't want to lose this area, 550, 560, or at least for the short term here. There's our overnight high. 750. That would be my home run target today. Maybe a little bit higher. But I have my concerns. Because we took out this previous day low, I have my concerns. There you go, Gambling Bear. Did you hit the longs? Look, if you're trying to short this, I don't have any problem with that. I mean, prevailing trend. I mean, if we're being 100% honest, if you're trying to short this for just another leg down, I don't blame you one bit. But I don't know. I just see this volume shelf right here, previous highs. I see this, and I just think, okay, we're So overcooked. I don't like the risk reward. The main target I have is here. This kind of 700 area, 694. This was a previous low that we had a couple weeks ago. Here, let me show you guys where that was. Be easier to see on this. Right here, January's low, 694. That's a flip spot for me today as well. So let's keep that in mind. 694, this upper area. What was our overnight high? 688. Yeah. So 650, 660, you definitely need a trim. Maybe even right here. We already hit that, so let's see if we push through it. We definitely need to trim up here though. Yeah. I really want to turn this light back off. I mean, I'm glad it lit up in here, but don't know. I don't know. What's up, Omi? Señor Emperador, feliz viernes. Happy Friday to you, compa. Chad Hughes in the chat. I see you down there. How's everyone doing? We doing good? I did take that long. I see your comment there on me. I took the long. My plan was to long here, starter, and add down into 20. At worst down here, 500. I went super light on the first, on the starter. I went honestly for the scenario. I mean, for me, I guess for my sizing, I still went very light in this trade. Don't really want to add anything because I know it's a counter trend trade, right? I know we took out previous day's low. I know we're sitting right here at 500. Right at break even on the day. We took out previous day's low. That makes it so tough for me to really shoot for the fences today. But we got to trade what the action shows us too. A little bit of a couple bottom wicks. I like this. I like this action. I think we can get back at least to back test the 694. You know, we've had pops in the morning the last couple days that have then faded late. I wonder if we continue a trend like that, or if we get a pop that holds in there today. I don't know. It's just we're so overcooked. $20 MA on the 15. Yeah, I'm here on the 5, and I'm watching us just struggle. I mean, we got everything. We've got all the EMAs and the VWAP are all right here. I almost want to move my stop up in profit here, but we're still so early. Yeah, to your point right here, this is so the low is also yearly low. Yeah, so January's low was right here, and we just took that out. But if we immediately reclaim, and I have this 503 marked because that was the previous high from last July. We reclaim this, which I don't know is going to happen today, but when we get back over this, then I would look for there's going to be a nice trade to the upside back over 503 at some point. Today, I would just like to get back to it. this 503 right here. I would just like to get back to that today. I think would be the ideal thing that we're looking for. But there's still a lot of selling pressure. It's still early. I mean, nothing's changed in the market, right? We're still down. There's still flash sales going on. But the other side of that coin is we are a little bit we're a little bit overcooked to the downside. I mean, those of you that watch MACD or RSI, or you just look at moving averages, you look at distance from moving averages. I mean, look, if we go to a 4-hour, R9 on a 4-hour chart is way up at 800. Look where the 21 is. It's over 21K still. We haven't touched this since what's that, Thursday the 27th. So it's did we touch it yesterday morning? Yeah, I believe so. Yeah, we touched it yesterday morning. We haven't touched it since. We're not even close to it. But you see how extended, when we get really extended away from these moving averages, you usually get some kind of counter trend move. So like this, we got really extended counter trend move back towards it. They caught up. You also see the 9 really reacting here. Let me turn off VWAP so we can see this a little bit clearer. And here, let's just hide this. Okay. So you see this, like, not touching this 9, and we finally get back into it a little bit. Got into the 21, got rejected. I mean, that's the prevailing trend, but right now we're extended away from these. Pretty extended. See the hourly 21. Look at that. It's been a money maker. Should get back to it at some point. We are pulling back here a little bit. See if we hold this area. Hold on, let me get back to my main chart here. Where are we at? There we go. There's a midpoint of that orb, but really want to hold here. Oh, if we go any lower, I'm out. Walked in some profit here early though. Okay, I could take another stab at it, but once again, I'm not going to do that. Not going to do that. What was the reason for the long chat? This 500 area, I saw just some orders yesterday that were interesting right down here. Like that was kind of a target, so I thought maybe some shorts would cover, and we had that huge flush. I just thought, we could play a bounce play back into this area, which we did. I mean, the thesis is pretty much completely played out. That's why I took my trims and I went up here to. They almost stopped me out there. Oof, break even stop. I'm not adding anything to this trade. It's the same spot that I was looking to get long before. But yeah, trade your own plan. We'll see. We'll get all the data here in a little bit. We did fill the gaps, so that's a good sign starting out here. Let's take a look at what SPY's doing. SPY's gap is filled. We haven't broke either side of the 15-minute orb on SPY. That's a big 15-minute orb, isn't it? See if SPY holds the previous day low too. That right here, this will be a watch. Hold previous day low, even though we wick through it. If we hold it on a reclaim, it could be a decent sign. I think I'm going to get taken out of this, the rest of this long trade. Maybe I'll stop sitting like right up here where my average was. We'll see. Any inputs on Riot? We'll take a look at that as soon as I get wicked out of this trade. Let me see if I get wicked out of this trade first. I considered adding right here in the same area, but problem is I don't see any buying size. I don't see any big resting orders here. It almost like it wants to continue lower. We couldn't get back over 500 on QQQ. We'll see. IWM made a decent move. What's our Mag 7? Anybody watching these Mag 7 names a little bit? What are we doing? Looks just like the market. Costco is up an hour, a percent. I'll take a look at Riot here in just a second because I want to keep my eye on this trade for just a second longer, just to see if I get stopped out and what the reaction is around the same zone. This midpoint, this is my midpoint of the orb right here. That's something that I use on this. Top of this wick is view up. That's something that I use. It's just the midpoint of the orb becomes like a liquidity zone. It's just something I noticed, and I had Edgeful add to the indicator. All right, 30-minute orb here in 30 seconds. All right, we're still in the trade. That's promising. I didn't add anything. I'm just gonna hold break even stop that long that I took. My average is 536. I want to test overnight highs. All right. Looking decent here. There's our orb. So we have our orb set. We know our high and low. We know what our first 30 minutes look like. I gotta send Andre the link. Let's take a look at Riot real fast while this trade plays out. Then we got Andre coming on. My thoughts on Riot are not going to be good if you're looking for a long. I mean, it's super beat up. Like, I don't think you short it. Maybe to me, these miners have been a perpetual short. I hate to say that, but just the Bitcoin miners, I don't. Maybe somebody understands them a lot better than I do. I don't understand how you mine Bitcoin and don't sell Bitcoin. Like, where is your profit coming from? I understand they have some technology stuff. Just look how terrible is that. Your 200 days way up here at $10. I don't know. Bitcoin miners to me are they're a tough buy right there. Let's go back and check on our longs over here as I bring in Andre. Andre's full port long, I guarantee. What's up, brother?
What's up, man? How are you?
I'm good. We a little bit of trading in this morning. I'm long from down here. We're up 112 points right now. So
yeah, that's sometimes like you'll send me a message and you're like, I'm up 100 points, and I'm just like, how are you sniping these entries?
Well, right now with volatility at 22 or whatever VIX is at, I mean, you take an entry and it could go 100 points both ways, like
yeah, I know,
real fast, and still end up back where you were. You have to like go way down inside. I've been telling people you got to size way down and like move your stop way out when market conditions are like this.
Did you see the gap fill today?
Which one? Because I was watching it on. Let's see. I mean, it filled on the first bounce
Yep.
on QQQ.
But did
Spies
you
was
see the
like a down
spike
though.
on that? The spike down? Like
Yeah.
when it was a tiny gap on NQ, 0.09%. If you go to that what's in play and you look at the,
Yeah, there it is.
and if you go to NQ, or even if you go to spot, whatever, QQQ, doesn't matter, 0.9% gap. And then there was a massive move down. Like a 0.9% gap is like a no brainer. I mean, it's like right there. But that move down must have like rinsed so many people, and then just for it to bounce and fill the gap from there.
This price action is brutal, by the way. Look at this.
Yeah.
Look at this candle from 650 back to 550. That's a 100-point candle.
Yeah. 5-minute candle. That's kind of insane.
Oh my gosh.
Um,
Yeah, I was like, okay, Friday morning. I don't see what's going to save the market today, Andre. Before we jump into anything further,
yeah.
so we got through. I mean, going into this week, it started selling off, but everybody was like, okay, Nvidia is going to save the market. Okay, it's not Nvidia, maybe it's PCE. PCE comes in just where it needed to, but
Yeah.
there was no shock factor that sent us lower, but there was no like
Help.
world's back, we're so back. Like there was
Yeah.
nothing in that report that made me think anything positive.
I've been personally, in terms of like anything long term, I have felt that, and I can share my screen, but as I go through this, which if you want to pull up my screen and whenever, but as I go through this, let's just even go 2023. And what I'm going to do here is I'm going to just cycle through my watch list and 2023. Long-term portfolio here, or like long-term buy, I have not been interested in the majority of these names. Like I cannot personally be buying at like zero pullback for over a year or 2 years, like no meaningful pullback. Now, some of these names, like, I mean, I would say that obviously Amazon right here was a pretty meaningful pullback from like the recent high, but most of these names, like even Netflix, like,
yeah, I want to own more Netflix, but I can't. Like I bought some of it like before, not this last move up, but I added some like 700s, and then again I added a little bit at like that 940, 950 dip.
yeah,
But I mean, just small nibbles at it because I was like, I want to keep building a position here, but at the same time, I'm like, how do you? And to your point, something that's really frustrated me lately, everyone, generational dip buy opportunity. We move a few percent off of all-time high. That's not a generational dip buy.
it's not even close.
If you look back, I mean, generational dip buy, or you're looking at like COVID or like
Yeah,
maybe a 2022, like because you had a crash, like two back-to-back crashes in a way. Not, I don't like the word crash, but basically a bear market, a big dip. But since then, I mean, yeah, how big was that?
27% on SPY.
There you go, 27%. I don't know if you want to call 27% generational, but it's definitely like that's a massive opportunity in the market to start buying stuff. Andre, I don't know about you. I'm like more cash in my account than I've probably ever had as a percentage.
Same.
Like I want I mean, do I want the whole market to crash? No, not really, but I'm not just going to keep buying up here. I'm not going to look at a 4 or 5% dip and call that like, hey, let's deploy all my cash and like, let's go on margin here. No, like I'm not, it just doesn't make any sense to me. And, seasonality, I looked at this yesterday on Edgeful. I pulled this up. Here, let me see if I can just grab that tweet real fast. Or no, never mind, you've got your screen up. Either way, the seasonality, I went to QQQ. And go down to the weekly.
Yeah, I saw this tweet. This is
And
in
you
the
can
last 3 years. So
I did 3 years as well on mine because I was like, okay, I don't really want the COVID data in there.
yeah,
But just like, what's the medium term trend been over the last 3 years, seasonality. Look how rough these weeks are in February.
Yeah,
And this last end of February, which I mean, you see the blue week that he's got highlighted
that's
there.
this week.
Then yeah, that's this week. Now, do you get really granular on week by week? Not for me. I'm looking like, okay, what's the week before and after look like? So
Yeah,
what's the general area? I'm not going to take this as like, oh, next week we're going to crash. No, like I'm just saying in general, this makes sense. Like if anything, we're probably in that next candle where
yeah,
this is the big pullback,
yeah,
and then we probably have a nice snapback return going into March. It is the last day of the month here, so
yeah.
we'll see. And just a quick trade update before we go any further as well. I'm still sitting in these longs. We're up pretty nicely here. My average is 536, Andre, on these. I was looking at that midpoint of the orb. I was talking about it. There's something with that midpoint of the orb. It's some kind of liquidity zone. Something's programmed to it. I don't know
Yeah.
what it is, but we're up over 100 points here again.
Yeah,
So
that's insane.
see if we can break through this upper orb and get to that overnight high. That would be
Yeah.
my. Andre, I don't know what the plan is. What all we want to go over today
Yeah.
with
What we
you on
can,
the stream, but we're great to have. It's great to have you. I'm excited for this. I knew
Yeah.
it was on the docket, but I also was like, okay, let's just get started on Friday. It was kind of slow on spaces. Yesterday was wild, so I was like, let's get started and see if we can trade a little bit before we really get into the
Perfect.
market here.
So what I would love to do is just for anyone who's new is just to go over the pieces, like the main pieces of Edgeful, like the typical run through. So anyone who's new, anyone who like might be tuning in for the first time, you get a good feel for what Edgeful is. Just going over some of the more popular reports, some of the features. But before we do that, I just want to look at this quickly. And this is the SPX. Now, now obviously this is insane, but if you look at any point throughout, even if you had bought at the highs in 2000, you'd be in a pretty good spot right now. If you had bought the highs in 2008, you'd be in a pretty good spot right now. If you had bought the highs in 87, you'd be in a pretty good spot right now. So sometimes I have to remind myself a little bit that, wow, even look here. Wow, this is crazy. So you look at the 1929, literally there was an 85% crash in 1929. This is like the like arguably one of the biggest crashes ever. 85% right over here. Now, if you look at this chart, it is horrible, right? This is terrible. It goes from 32 to $4. Now, the more you zoom out and the more you zoom out and the more you zoom out, that literally looks like a flat line. So I'm not saying that the market's going to go up forever, but obviously I would never say that. But sometimes what kind of gives me the peace of mind is in 30 years, are my buys now going to be good buys? I hope so, right? Like I hope that this trend continues. So in the next 30 years, like it's not going to matter if I bought the SPY at 250 or 300.
Right. Yeah. The long term, and you pull up any chart. Any of your like blue blood, like names that have been around for a while, strong companies that are showing growth, they're all going to look very similar to this right now. There's a few obviously that don't work out this way. Intel, something like that maybe doesn't work out this way. So they're not all going to work out this way, but the vast majority of your charts over time are going to go up in a similar way. And it does get that parabolic type of curve to it.
There's a comment here, truth to power. I could not agree more with what you're saying here. You're saying that the market, that first one that starts with yeah, that one. I don't think that people actually understand like the implications of what he's saying here or what they're saying here. That is a fact, by the way. Like that is absolutely the truth. So, I mean, it's just an interesting piece, and I definitely agree. And I wish that some more people understood that, but it doesn't. I mean, there's
nothing we can do about it but figure out how to profit off of it.
Exactly.
But there's some points that I feel like you can't deny, but at the same time, it's like, what do I do other than figure out how it can benefit me indirectly, even if it's a rough look on the on the bigger picture.
Yeah. All right. So what I can do is, and we can kind of like even kind of go back and forth together on some of the different features. So like we can go over it quickly in like 10, 15 minutes, like go over Edgeful just for anyone who's new. And then we can go over some of the, like some of your favorite reports or some of like the most popular reports. It doesn't really matter. But I just wanted to, for this specific stream, I just wanted to give people some sort of guidance on when they get started on Edgeful, like what should they expect? Like where should they go? And like how does everything work? So they can kind of have a decent idea of it.
Yeah, no, I'm excited for this. I'll give I'm taking a trim here on that trade that I'm in. I don't know if everybody else is in, but we got into the 80s here towards the overnight high, 140-ish points, 150 points. We're going to go ahead and trim here and let the runners run at this point. That's a beautiful trade. And now we can learn a little bit more about Edgeful. Andre, I'm excited for this because I get these questions a lot too. I get on here on these streams and I fly through Edgeful because obviously I've been using it for quite a while at this time. And I know people that are newer to it. They're like, maybe they come in, they're like, where do I go? Where do I start? So I think breaking it down a little bit so people can see, look, this is a fantastic tool. And I've told everyone this, just 1 second on this, Andre. I use Edgeful every single day in every single trade. I'm always looking at it, data every single day. I can't stress this enough because I don't want people to think I just jump on here on an Edgeful stream and that's why I'm using Edgeful, because it's not the case. And anybody that follows me outside of here will know that is the case, because I literally have incorporated all of this into my trading strategy. It's helped me become very, very profitable. So just I want to get that out of the way. Like, hey, this is what I use. And I do get these questions a lot because people that have followed me for a while, they're like, hey, what are you seeing on this? Or why did you do this? And I tell them, well, the data told me X, Y, Z.
Yeah.
And they're like, okay, well, I'm going to try it out. And then I get, hey, do you look at the 15 minute? Do you look at where do I go? And so I think this is a really good, especially on Friday. Who knows? We have volatility, but I don't have a clear picture of what the market's going to do next. Right now, just looking at this, the last piece I'll say here, looking at this, we have had a nice move up. We did catch a nice long trade. This is a complete counter trend trade. We just hit basically the full target I was showing you guys, which is, what was that? 158 points. We hit the full target. We hit that back test I showed earlier. That 694, that took my last orders and trims. So like I have just nothing worth of runners left.
It, huh?
Yeah. 4 points. Hey, it was a big area. If you look back to January, the low that we made not too long ago was 694, I believe. The pullback we made in January, mid-January. So that was my main target, was to back test that.
Very nice.
And we basically got where I wanted to get to on QQQ as well. So runners only now, which is great. Get a winning trade to start the day. My point, though, on this, Andre, was I'm looking at this. This is a complete counter trend trade. Look at this absolute reversal. Oof.
That's brutal.
Yeah. So we're looking at a counter trend trade. The trend is down. I know I'm counter trend trading, so I'm not swinging for the fences here. And some of the data is already telling me like, hey, I'm going against it a little bit. Previous day lows have been broken. That's not the most bullish probability in my favor. So I take that into account. So that being said, I don't know what's going to happen the rest of the day. I know we have a ton of volatility, but I wanted to get a decent trade out of the way. I saw the setup. I'm probably not going to take another trade unless something just crazy jumps out to me, because we've moved up within a downtrend. And we have data that's going to tell us that we don't maybe want to swing for those fences a whole lot today. So that's why I think it's perfect to go through and go through some of the strategy side of stuff instead.
Yeah, for sure. And I do. It does come across, just I don't know how many new people there are in here, but it does come across that you actually use this app because number one, you know about it. Like, you know everything about it.
I have half the stats memorized. Now they do change, so I have to go check them constantly because that data is ever updating, right? I mean, something that was happening 4 months ago is not happening today. So, but I check it enough on a daily
Yeah.
basis that I pretty much know the stats. I know which stats that are very strong, and then there's some that I don't know off the top of my head that I need to go, I need to go in and review quite
Yeah,
often.
for sure.
So that being said, I can fire off. I can tell you, okay, previous day low broke. It's probably a 78% chance that we have a red day, or I can pretty much get really close to what the stats currently
Yeah.
are.
And that's the way it should be, honestly. I mean, as a trader, I always say this, but like, good luck if you're going to go based on your gut feeling for understanding the market environment that we're in. It's like, if you notice that a report went from like 80% to 50% or 75 to 50%, like that's a huge difference that you need to be aware of to actually trade profitably as the markets shift. But let's get into it. I'm going to go through and show you guys like the 4 main features here. And it's the Discover page, the Report page, What's in Play, and the What's in Play screener. Those are the 4 main pieces that we have. And I'll start with the Discover page. So, and just so everyone knows, I mean, we kind of like assume sometimes that people know what Edgeful actually is. Edgeful is a data analysis platform for traders, primarily for scalpers and day traders. We do have reports for swing traders, but it's mostly tailored towards scalping and day trading. But what this does is it breaks down any trading strategy or concept and tells you the probabilities around like the performance over the last X amount of time. So if you want to look at ES or SPY or Uber or Snapchat or Tesla, Nvidia, whatever else, we have the reports for you. We also have crypto and Forex. So we have stocks, crypto, Forex, and futures. So you can literally look at any instrument you want going back 5 years. So in this case, I just wanted to do a little intro on like what this actually is. And let's get into the discovery page now. So the purpose of this page was built so that you guys can actually discover what we have and what the reports are and explore what the reports are in a way that's like very clean and intuitive. So we built the actual interface here or it's around like e-commerce. So like Amazon or any like shopping experience you guys have, you always have your filters off to the left side, and then you have each of the results of the filters in the middle. So here you can see that you can filter for volume reports, or you can filter for price action reports and whatever else. So like here I clicked volume and you can see our volume reports appear here. They're broken out in these different chunks. So you can see I have volume and range analysis and volume analysis selected here. If I want to go to price action, for example, and I want to uncheck volume, you can now see all of the price action reports that we have. So if you know that you want to look at whatever, only market open and close strategies and only session analysis, you can go here and you can see right up top, right over here, you can see our market open and close strategy, all these reports, and then the session analysis reports are all down here. So this is a way for you guys to go and kind of like figure out what's what. Now, if you're going to be watching Emp on stream, he's probably going to be mentioning a few reports to you that he likes to use. And that's also a great way to get started on like, hey, what should I be looking at? So
yeah, what are other people using? That's
exactly.
So like there's a few that are my favorite because I've
Yeah.
used it for quite a while, and then every once in a while I'll watch some of the other streams. I was watching James Bruce this morning,
Yeah.
and he was going through a report. Then I was like, hey, wait, maybe I need to get that one in the tool belt over here a little bit. You know what I mean?
Yeah, exactly. And so like, for example, for me, these are my bookmarks here on the side. And this is what the extent of what I will use. Now, I don't use all these every day. Now, that's really, really important that, for example, I don't use market session breakout, market session correlation in my trading every day. But these two have very strong, this is comparing the London session, the New York session, or actually with any customization, you can look at any session, you can compare them. Typically, I don't look personally at the London session too much, but this is a great report for me to look at when I do want to look at it. So I don't use all these on a daily basis, but these are really the ones that are in my tool belt that I have in my bookmarks, so I can quickly just go back and forth and just go explore easily. So obviously EMP's list is going to be different. Your list is going to be different and whatever else. So just obviously keep that in mind that this should be curated to your trading style and how you like to trade right over here. You can screenshot this too, which, by the way, is this big enough? Should I make it bigger? Is that better?
You've made you're on Mac. You may hit that Command Plus a couple times. Just make
Yeah,
the
yeah,
that's what I've been doing, just to make it a little
yeah,
bit bigger
yeah,
for everyone to see. And I will say that on the right side, every time. So first, every time we go through one of these streams, I learn something new,
yeah,
and I get better at using Edgeful myself. So I actually really enjoy these. And then that right there was one thing I learned, what, about 2, 3 streams ago.
yeah,
You can actually hide that thing. So you
yeah,
can build your watch list over the side, and you can pop it out and hide it just by clicking over there on the right side. So
yeah,
anybody that's using Edgeful, I mean, it makes it bigger, makes it easier to see, but it's a really quick way to get, and you'll see me doing that actually when I'm on the stream here. You'll see me grab and move things pretty quickly
yeah,
because I can save it over there. So
yeah,
great way to build out a stuff. And I know a lot of the people that are in this chat, I hear them or I see them, and we talk about they're trading Nvidia, they're trading Amazon, they're trading these other names, right? And they can easily, new high of day right here, by the way, and they can easily switch back and forth, and you can find that data pretty quickly, which
yeah,
was something that we talked about at one point, Andre, was how quick you can get to the stuff now with some of these newer updates.
yeah. Yeah, I was to be honest, that conversation that you and I had where you like showed me your charts, you showed me how your setup is, and you were emphasizing really that speed, because obviously in trading speed is very important. That is one of the reasons why we had built this sidebar out, and also specifically the watch list, because previously to go from futures to something like Nvidia or some like random stock, it was like 8 or 9 clicks. And now, regardless of what page you're on, it's always 1 click if you build your watch list, which obviously I highly recommend. If and you're not bound to your watch list, which I'll show you guys in a second. Like it's not you're not limiting all of your what you can see based on what's here. This is just what you look at most often here to the side. So what I'll do is explain a little bit of like what the possibilities are on this page here, and then we can go into the actual report pages where I'll show you how to like move everything around and like do the customizations and switch everything else. But when you're on this page, there is only really 3 things that you can do. You can bookmark right over here. So you can see that these blue boxes up here, right where my mouse is, these blue ones are bookmarked. And then this, you can see right here, this gray one is not bookmarked. So when you click on this, when you click on initial balance or whatever, it's going to add it to this piece here. So if I click on opening stats, you can see it just got added right down here. Now I'm going to remove it. Now it's gone. Now, there's only 2 other things that you can do from here. You can click either the explainer or go to report. So go to report, obviously will take you to the report page, and then the explainer will bring up this pop-up. It will give you like a bigger picture. Let's say you don't know what the gap fill is. I just clicked on the gap fill explainer. Right here is the name of the report, right down here. And then it will say, what does this report measure? You can see this report measures how often price today touches the previous session's closing price. That is what a gap fill is. It's what we were talking about a little bit earlier. Right here, previous session's close. I'll mark it out quickly. Previous session's closing price right over here. You can see price did touch this today. So that the gap did fill on NQ. But from here, this allows you to say, number 1, do I want to bookmark it? So we give you another opportunity to bookmark, because we really do believe it's very important that you bookmark. But from here, if this is like, you're like, nah, you know what? I don't really care about this. This is not something I'm interested in. Then you just click out. Now you can go to it. You can go explore other reports. So we want to give you like the easiest possible route to find what works for you. And that's why we built this page specifically.
Yeah,
So
I
now,
think it's fantastic because it when you first come into Edgeful, maybe it feels a little daunting to some people, right? Because
yeah,
there is so much information out here, and which is a fantastic problem to have, because that means there is going to be multiple reports for you, no matter what you trade. Whether it's options, whether it's stocks, futures, even crypto, everything is on here. And
yeah,
so, what a great way to kind of display what all you guys offer, because this is something I did early on. Was I was like, okay, I need to find what works for me. And I
yeah,
remember early on, before you guys had really built this out, I was like, okay, where's my, where am I at? Speaking of where I'm at, This is pretty much that full target I was talking about. We had 200 points here.
That's insane.
I'm just taking my last trim here at 200 points. The runners can go wherever. That's the beauty of a trade that you take and you let work out. I don't even have to watch it. I can just look over and check in on it, whatever. I'm fine. Honestly, I don't even have to look at it anymore because that was the last trim.
Yeah, that's honestly what a trade that you took here with that 50 whatever average or whatever it was. That's
36, 536.
Yeah, that's insane. Yeah, that is wild. And yeah, I mean that's pretty hard to believe. These 200 point on your runners. That's how you hold on to winners. That's how you diamond hand your winners, guys. That's what you got to do. People diamond hand their losers. They don't diamond hand their winners. That's a huge problem.
Yeah, that's backwards, right? Long and take your shot, and then let the runners work for you. You know, start trimming out, let the runners work. And look, I can sit here and have a full conversation with Andre. I'm not stressing over 750 is the main target I gave you guys right there. So watch. I mean, honestly, I'd probably just take the whole trade off here. What I'm going to do is just trail the stop up. But I'm in runners only. I really don't care. If it comes back, stops me up, I'm in profit. But I can have a full conversation because I'm comfortable. I took my trade. It worked out. I trimmed everything out, locked in the profit. Now, whatever happens, happens. It doesn't. I don't care. If these runners keep going, great, more money. If not, whatever. I can have a full conversation.
Yeah, that's nuts. It's and that's the way to trade. Trading doesn't have to be so stressful, by the way. It shouldn't be so stressful. It shouldn't ruin your day. Like nobody's perfect. Like there will be days where you like don't execute well or whatever else and you get upset, but like it doesn't need to be stressful. It should be pretty straightforward once you have a feel for things and once you have like something that you like to trade and like we were just saying, like you pick a certain set of reports, you trade when they set up, you don't trade when they don't set up, you hold on to your winners. Like trading is very simple. It is not very easy, but when you have resources and tools like watching this stream and watching Emp trade and him walk you through his thought process, like you're talking to a very profitable trader, you're talking to a guy that like has all the right habits, executes well, uses the data, he uses his resources, and he executes well. So like as a trader, taking advantage of what's around you is super important because like you can make all the mistakes on your own and you can learn from them hopefully rather quickly, or you can use data instead of you trying to figure it out yourself. You can watch these streams, learn from traders, and have like in this case, Emp walk you through his thought process, why his stops are in certain places, why his targets are in certain places. Like that other piece that he was saying before, that January low was one of his targets. Like a new trader might not know that, but when you use your resources around you, like obviously watching the stream, you can see these things and learn quicker. So it's an important piece there. Wow, this move is kind of insane. Not gonna lie, I was not expecting this. I didn't take a trade today, so
I said this early in the stream. I said, look, I know the previous day's lows have broken, but I have a feeling that may be the outlier data today, just because we're so overcooked to the downside.
Yeah.
Now, pop in the morning, sell late has been the trend lately too, so we'll see. But we were so overcooked to the downside.
Yeah.
I mean, just overcooked. So this was kind of what I was leaning into, and that's why I said, guys, I'm a little bit concerned. Holy sh! 250 points.
Yeah, that's insane.
It's kind of an insane move here. But okay, so that was like one piece of data that I went over this morning that I said, and the bigger context today may go against this. This may, just because of the bigger picture, I said this may be that 20% of the time where we do go close green, even though we took out a previous day low because of the situation. We took it out early in the session. We're super overcooked to the bottom, but we're also right now, actually, we just got our IB. So we're going to have, and we just took out the IB too. So we're going to have 2 or 3 reports that are actually, and this is kind of me predicting, I guess, what's going to happen a little bit just from experience. But I was kind of thinking, okay, if we get this push up here, now we have bullish opening candle. So the opening candle report is going to be bullish. The IB broke to the upside. That's going to be a bullish move as well. So we're going to have several bullish sentiment factors here as far as data bias goes.
Yeah.
And that I don't know. Maybe that's from experience, but it's also just from knowing and using Edgeful each and every day. I kind of piece together the scenario, right? And that's how I can confidently take this trade, go into a full conversation, and let runners go. And once again, 250 points with this type of VIX. It's not the craziest thing in the world, but 250 points is always pretty good on a Friday, right?
Pretty good is a conservative way to explain it. Yeah, I just plotted out the IB there. So we'll get to this in a second. What I'm looking at here, what I want to do is just go to these reports quickly and walk you guys through what these reports are, how you can use them, and everything else. So right now we're on the gap fill report. I want to show you guys this sidebar here, exactly what it does, how you can use it. And then we'll actually go into like the meat of this page too. So number one is going to be choose your asset. So you don't actually have to go back and forth from the Discover page to this page to change your report or to change anything else, because we didn't want it to be a clunky experience where you have to go back and forth. We gave you the option to do it from here. If you know, like let's say you're already familiar with Edgeful and you hear someone talk about, you hear M talk about, oh, I found this new report, it's really cool. You can go right over here and just start typing out like whatever. I know this is not one you'd use, but the opening retracement, the ICT opening retracement.
This one, maybe I need to start watching this one. I've seen multiple like other people like following this, and I think if this just played out like yesterday or day before,
Yeah.
this played out like so beautifully. I saw like somebody put out an explainer video on this, and
Yeah.
I literally want to learn more about this one. Like this one's all over my
we'll
radar
cover
right
it.
now.
We will
It's
definitely
all over my radar right now.
Perfect. We'll cover it. You might not like the name, but it's okay.
Yeah, well, I mean that's a whole different. I don't care if something works, it works, right? Like,
Exactly. Exactly.
I think everyone needs to have that kind of BS filter in their head a little bit.
Yeah.
Like, okay, I don't. Where can I find value out of whatever's out there, right? There's some people that, I don't agree with their full-on thoughts or how they trade or how they act on different social media platforms, maybe.
Yeah.
But they have analysis that I can pull value out of.
Correct.
I think that goes for a lot of different places. So not just particular to the name of this, but
yeah,
we'll leave it at that. But I do see this as a very useful, and I see it. I just saw it play out and I've seen it play out multiple times now. You put this on my radar, and then I watched somebody else just within the last 2 days. Somebody put out a video showing this, the full example, and I said, "Wait a second, this has got to be on my radar."
For sure. And we'll cover that in just a second. That'll be the report that we go through. But so up here, number one, you can go to stocks, Forex, crypto, and futures. And when you change this, it's going to change the ticker drop down that you have here. So we're in futures. When I click choose ticker, obviously I'm only going to get the futures. If I go to stocks right over here and I click this ticker, it's obviously going to be all the stocks. So these two right here are linked. And then here you have choose report type. So from here, you can filter down. And again, these two are going to be linked here. 3 and 4, choose report type and choose report are also linked. So when I click on choose report, we have it defaulted to all, which I think is just easier for everyone. Because now when you open the choose report, all of the reports are going to show here. So from here, you can just start typing and you can just start finding the like all the stuff you need. And like in this case, if we want to change reports, you can do that from here if you don't have something bookmarked. But next is the date range. So this is super important. We have 6 months defaulted, but what this does is it allows you to look at different, this is how far back you want the report to look. So you can go back up to 5 years. Personally, I don't recommend it. I think 1 year is really the furthest you want to go. And that's my opinion. You guys can do whatever you want. Obviously, it doesn't matter to me. But 1 year, 6 month, and 3 month are the ones that you want to look at, in my opinion. And where is it? And you can also select custom timeframes as well. So you can select like Q4 of last year or whatever you want. You can do that here as well.
I like to compare those timeframes too. I don't know. Do you ever do that, Andre?
Yeah.
So like I'll look at, okay, what are we doing the last like month or 3 months compared to the last 6 months or year? Just to see like, are there major changes going on in the behavior?
Yeah, 100%. So with this date range, If you go to the 1 year, now we're looking at the NQ gap fill, you can see this is 60 and 62%. And then if you go to the 6 month, it's 62 and 56. And then if you go to the 3 month, you're going to see it's going to drop more. So it's more 50-50 now. That's like not fantastic, to be honest, obviously. So you can see that from the 1 year to the 3 month, the stats have technically gotten worse if you are a gap fill trader. And what that means for you is that this is something you might want to take your foot off the gas for. Like, you don't want to be trading this as much or as aggressively, because if you see the stats go from like 70 to 60 to 50, it's not going in your favor. That means that less and less gaps have been filling in the more recent times. So if the inverse is true, though, if you go from the 1 year is 50 and then the 6 month is 60 and the 3 months is 70, that's a better sign for you to start to get more and more aggressive. So that's the way that I like to do it. And we also just added, I don't know if you noticed, the session time right here. So I know a lot of people get confused on what's session time because it used to be only over
No,
here.
that helps. Yeah, no, that helps because like when I was looking at the data one day on just like I took a screenshot and I went back to it and I was looking at it and I was like, wait, was this? Did I put the right filter on? And then now it's up there. I was like, okay, perfect. Yeah, it's New York session. Which is the main thing I focus on.
Yeah, for sure. It's without. I mean, most people won't have to change this. If you guys like will trade a different session, that's where you can start to play around with it. But that's where you can start to play around with the sessions. But for the most part, New York traders, you're going to stick to this session here. Then number 7 and 8 are super important here. So number 7 is a sub report. These are the filters on the reports. So right now we're looking at the gap fill report. You can see we have by size, by weekday, by close, by spike, by time. These are different filters or variations of this report. So for example, if you want to go to the by weekday version of this report, you can go here and you can start to filter for certain weekdays. Now we're looking in the last 3 months, so whatever, it doesn't really matter what time frame you're on, but your filter.
Let me while we're on this, let's point out yesterday I wasn't on stream, but I was on Spaces yesterday. An outlier that I look for on this exact report that you're talking about. So go to QQQ for me. Let's do gap fill on QQQ for yesterday.
Yesterday, gap fill up. Yesterday, gap fill right here. So this is the gap fill. There was a gap up.
We had a gap up.
Yep.
And we were looking for that gap to fill down. Now, if we go to the report on this and look at QQQ gap fill report, if you look at by size, don't click on that Thursday yet because that's where I'm going. If you go by size, what was the size, like 0.4?
I think it was 0.7 something. 0.73.
0.73. Okay. So if you look at the size, gap up, it was a 50-50 shot basically.
Yeah.
So you see that. So I'm looking at that. I was like, okay, I don't have an edge. This is a coin flip.
Yeah.
But I've looked through these before, and while he's showing these sub reports over here, I think this is important because you can look at different things from different ways, right?
Yeah.
So I had no edge here. I have no edge at a 50-50, 55-45.
Yep.
But now if you go by day, and this is just an outlier report that I found within here. But by weekday, this is the gap fill report by weekday. Now look, okay, we're on Friday. Before you click Thursday, look at Friday and look at gap up on Friday. So if we gapped up today, still no edge there. Click on Wednesday. 50-50, no edge there. Now click on Thursday. Gap fill Thursday.
Look at that. 70%.
A lot higher percentage right there on Thursday. Now click on SPY.
Look at me using my watch list here, instantly switching.
Yeah, this is how quickly I went through this yesterday morning.
So
now look at SPY. Look at Friday.
Here.
No edge on Friday, right?
Yep.
On a gap up on Friday, no edge. Wednesday was also no edge.
Yep.
50-50. Now look at Thursday on SPY.
Wow. That's pretty interesting, huh?
Yeah. So this is why, like, showing how to use these sub reports when you're in Edgefold, you can find absolute gems in here if you play around and learn how to use this platform a little bit. Look
Yeah.
at this. We talk about Gap Fill Thursday. You hear it all the time. And when I hear people just say stuff, I'm like, well, show me some actual data, because more times than not, they're just saying whatever sounds good, right? Oh, it's
Yeah.
easy to say Gap Fill Thursday, Gap Fill. Okay, whatever that means, right?
Yeah.
Let's quantify it with some data. And I found this right here. So gap ups, if you see from Wednesday into Thursday, price moved up overnight,
Yep.
you can guarantee I'm going to try to fade that every single time, because what is it, 9 times out of 10 basically right now?
Yep.
When you gap up on a Thursday morning, you're going to go fill that 89% of the time. That's on
Yep.
SPY. So I was literally yesterday morning looking at SPY, looking for that gap to fill. And then after the fact, I said, hey, you guys hear gap fill Thursday all the time. Let me show you why it's gap fill Thursday. Not just, hey, it sounds cool, but let me show you why it's gap fill Thursday. And you see, we moved up overnight, we gapped up, and look at this price action right here. Right off the open, I knew I had basically a 90% chance, a 9 out of 10 chance that we were going to come down and touch the previous day's close.
Yep.
Boom.
Yep. And that's
why not? Why not take this trade? I would take this trade and hold through some drawdown. I'm taking that shot. I'm taking that shot 3 times if I have to play out, because it's a 90% chance.
Yeah.
And it's obviously played out absolutely beautiful yesterday morning. I mean, the drawdown wasn't even that bad, but if you look at, when we came into the open, and you can see this on the what's in play as well. I know he hasn't really got to that point of this yet.
Yeah.
But the what's in play, and we can't really show it to you now because it's already developed.
Yeah.
But in the morning before the open, it says gap forming.
Yep.
And it tells you the size of it, and it tells you the direction. It tells you where you're at and which direction you should look at. So yesterday morning, this was saying gap is forming.
Yep.
You have a gap up. That's bearish sentiment. And I know, hey, it's Thursday. I need to go, pull the stats. We just showed you how to get there really quickly. Gap fill report. Go by weekday, find your edge. That's what this is all about. I found a major edge on Thursday gap ups.
Yeah.
Major edge on Thursday gap ups. What do you think I'm looking for? Andre, tell the people, what do I look for first thing every Thursday morning now?
You're looking for is praying there's
is there
a gap up.
Does this meet? Is this in play for me today?
Exactly.
Because that is a strong stat for Thursdays.
Yeah. And it's listen, we're buzzing around here. We're going quick. We're going from page to page. We're tossing in like sub reports and filters and this and that.
You can watch this back, by the way, everyone. It's recorded. You can watch this back later and get it, slow it down for you if you need to.
Yeah. And it's gonna take some time to get a feel for it. Like, give yourself a couple weeks. Give yourself a month to go
at least a month.
Yeah, I mean, realistically, it should be a month where you can allow yourself to go in and kind of figure out like what's what. Like if you trade options, like maybe something that you love to trade Tesla, but like Tesla's not really working well for you right now. Look at SPY, look at NVIDIA, look at QQQ, look at something else. If you trade futures, like seeing how these things change, giving yourself the important pieces of data so you can actually go and take advantage of it is so important. But you have to give yourself the chance. Like realistically, a month is going to be the right amount of time for you to go and actually learn. Like if you're going to give yourself a week, like we have a free trial and it is a week. Honestly, we want to remove it because it forces people to like pigeonhole themselves into figuring everything out in 7 days. And like, honestly, you need to give yourself a month to really acclimate to this and how you can apply to these reports to your trading. And like 7 days, you don't have enough time for these things to set up. Like in 7 days, there's only one Thursday. If there's a gap down on that day, like you're not going to be able to take advantage of this report. So give yourself a month to explore it. Like Edgefield pays for itself.
Yes.
Like, Edgefield really pays for itself in terms of like, we're giving
one MNQ, one MNQ. The smallest like possible size that you could use on futures, just it paid for itself already.
Exactly.
For a whole month.
Yeah. And that's the part, like we even have it on our pricing page. Like before you check out, it says less than the profits of one trade. Like this thing really pays for itself. Like if you knew that 90% of the time in the last 6 months,
more than that in commissions a month.
Yeah, probably in a day.
From trading
Yeah,
easily. Yeah,
exactly.
maybe a day. Honestly, some days
Yeah.
I do easily.
Yeah, and in this case, like a $2 move on the options on SPY, I mean, you're easily even if you took one contract, you're making
Yeah.
if the
Okay.
delta is
So
50 cents.
there's the real world example right there. So that because sometimes I think that's what people need. That's what I need, at least my way my brain works. So give me a
Yeah,
real world example. So I look at this yesterday, and if I took spy puts based on that right at the open, spy puts
yeah.
I could take what 505s would probably be a good strike because that puts it in the money. So
You're on
what was our?
QQQ.
Oh yeah, you're right. It's gonna be what what was the gap
I'll
fill
switch back
level?
to SPY for a second because it's the
Go
same
yeah,
thing. It doesn't matter. It would be the 595s.
595. Yeah, okay. So 595. So right at the open, you could hammer 595 puts knowing, hey, 90% of the time price is going to go below 595. So the put's going to go in the money. You
Yeah,
could pretty much hammer that. Now, not financial advice, obviously,
yeah,
manage
of
your own
course.
risk, everything. But just the idea here for the educational piece is right here at the open actionable setup that I see is, hey, SPY is going to come down to at least 595 and fill this gap
Yep.
90% of the time. I could hammer these puts off open and look at how far they went. I mean, I wish I could pull up the actual contract and see, but look how
Oh my
far that move
god.
is. That's probably a 300-400% trade easily.
At least, even if you're trading the 595, which is like whatever, relatively at the money, the delta is going to be. I mean, not to get into options like complexities, but the delta is going to be close to 50 cents. Maybe because it opened around 597, it'll be like 40 cents. By the time, so for every dollar move, your options are increasing by 40 and then 50 and then 60. And once they go in the money, they start going 70 and then 80 and then 90 cents. So that means that literally a $2 move, even if you got 50 cents, would be $100 per contract of P&L, which would be, even if you caught half of this move, you would have paid for Edgeful for the month. If you caught, this is literally exactly, this is a perfect example. If you caught half of this move yesterday with one contract, you would have paid for Edgeful. With one options contract, you would have paid for Edgeful for the month. So this is like, I don't know, to me, I mean, to me, it's like such a no-brainer, but like, it's so difficult to, I genuinely cannot even wrap my head around how people want to be successful in trading if they're not going to like invest in some resources around them. Like if
Yeah,
you want,
you've got to have some tools, right?
yeah,
You're
like,
not going to go to construction and not have any tools with you either. I mean,
yeah,
you're going to invest in some tools for the trade, right? I mean, that's just part of it. Plus, you're trading against. I mean, Andre, you kind of come from this world a little bit before
yeah,
too. Who are we trading against? With the best minds and the best data and the best computer systems in the world,
in the
right?
world.
So we're just trying to get a piece of that move.
Exactly.
That's our goal as retail traders. We're trying to get a piece of that move, and
Exactly.
we're not trying to beat those guys, right? We're just trying to get a piece of the move that they create.
Yep.
And at the end of the day, what do we have to do? We have to find some type of edge. Otherwise, what are we doing? We have
Yeah.
to have some type of edge.
Yeah. And the only way that you guys are really going to be able to figure out, so like Emp just said, we need to, as retail traders, we're not the ones that move the markets. We need to understand what those big guys are doing, what the institutions, what the big funds are doing, so we can hop on the trend and take a little piece of the bigger move that they are creating. So they're starting the wave. We just need to hop on and hop off. And what Edgeful does is it gives you the patterns that these waves are creating. So what are they doing? What are the algos doing? This is literally a breakdown of exactly how they move. How often does the gap fill? How often does price double break the IB? How often does it double break the orb? The double break on the IB doesn't work. For whatever reason, it doesn't matter why it doesn't work. You just know that that's not the wave that you want to jump on. You don't want to be spamming the reversal on a break of the IB. It's the same thing. You need to have this data in your tool belt, because if you don't, you're just going to be winging it. And again, like Emp said, we're going against the biggest institutions, the best minds, the brightest minds, the most advanced robots, realistically.
I mean,
And
AI at this point too, right?
yeah, exactly. So that's the piece that's really important for you guys to know. But and that's where where you can really start to refine everything based on your trading style, based on your personality, based on what resonates with you. A lot of these sub reports are going to do that. And then the last thing in this case here, every report, or for the most part, has a customization, number 7 here. And I'll actually switch back to ES, or I'll switch to NQ. It doesn't really matter. Number 8 here, the customized report. This is where you can really start to refine all the reports based on your trading style. So one thing that's actually really important here is that right now the gap fill is kind of garbage. Like flat out, to be honest, like the gap fill is just like, it hasn't been working. And typically when you're looking at the standard report, there are certain days that have an edge. Like Amp was saying, Thursdays on a gap up. That's a very unique situation, and that's where you can strike and you can swing for the fences. But for the most part, the other days are not going to have a massive probability in your favor. So one of the ways that you can do this is you can start to tweak the report to say, you know what, if I know that it's not as likely for price to reach the previous day's close, like that full 100% gap fill, you can start to tailor it to say, you know what, in this market environment, it's not working, but what if I tried to go for the half gaps?
Half gap. This isn't, so like a lot of you, maybe you're newer traders or you studied a few different things. The half gap is a thing that a lot of trading systems teach, but they don't tell you the stats or the data behind it. Like they don't really give you the full edge. They just say, hey, here's a strategy to go trade this, go trade for half gap, right? Now you can actually quantify that into probabilities, which is all that we're about as traders.
Yeah, 100%. And that's like really the only thing that's important is the probability. And I'll show you guys what a half gap is. So we marked out previous day's close. I'm going to make this red. This is today's, this was yesterday. This is the open. So there was obviously a gap up right over here. It was $2.14. You can see with my tool, it automatically plots the halfway point between the open and the previous close. So, and again, just talking about that, it's unbelievable. The options contract, if you were to take your profits, if you caught half of this move, it would have paid for Edgeful for the entire month. So here, if you enter short somewhere around here at the open and you want a higher probability trade, instead of targeting this red line, which is the full gap fill, you can target halfway between the open and the close, or the previous close. And now you can see that when you make this 50% down here, 70% of gaps up filled in the last 6 months, and 80% of gaps down will touch the half gap point. So a wonderful place to take a trim, at least.
That's why that's a trim spot for me all the time, just based off of that report. I don't want to take full risk for the whole thing. I want something's going in my favor. I want to lock in some profit, right?
100%.
So where should I lock in some profit along the way? This is a big way that I use Edgeful is where do I have profit targets? Do I have reasonable targets? Where should I be taking some profit? And this is a way you can build your system out of trading where you take an entry and you have a roadmap of where you want to go. Where are you taking the trade? For me, I take an entry. I'll say, okay, I need to have some trim spots along the way on my roadmap. Half gap, there's a perfect one, and I can quantify the probability of getting there along the way. So I think that's a very important spot. Is not only, am I trading the right direction? I mean, that's obviously one of the first big steps, right? But where am I even going? How many people take a trade, they don't know where the trade's going? Like, well, I'm long here. Okay, where are you going? Where's your profit targets? How do you set targets? That's Edgeful basically took me from I'm trading pretty good based on analysis, but where am I taking profit at? It gave me places where I can quantify my probability of, hey, if I had to take a full position, I need to take off half when we get to half gap, because that's like a 70% chance, and then it's a 62% chance that we get the full target. Those kind of things, right? Quantifying that out in your trading, that's going to take you from like a level 2 trader to that level 3 where you're really constantly finding profit. That's where consistency is going to start building out for you guys.
100%. And that is such an important piece of mentioning the consistency, because these are higher probability areas. Like this one specifically, obviously, is higher probability. But the important piece with that is you have a data backed level. You're not saying, you know what, I'm going to enter here, my stop is here, I'm going to do a 2R or a 3R. And like, yeah, you can do it.
Why?
You can do
But,
that.
but
But like,
why? Like what?
it
Every
doesn't,
time somebody says, "Well, I like using a 1 to 2 risk, risk reward or whatever," I'm like, okay, but why is that your target?
yeah,
What
there's
what
just like
what
some
what on your
arbitrary
chart?
number.
Yeah, you're just saying, okay, just because based on your entry arbitrarily in the chart, you're gonna go, okay, well, I want 1 to 2 here. I'm risking this. So yeah, it sounds great as far as the risk reward goes, but why are you taking profit there?
Yeah, it
You
doesn't
have
make
something
sense.
on the chart or something data backed that tells you, hey, you should take profit right here.
Yeah. And
No,
like,
you don't.
it's that's one of the craziest things to me is like, especially when you hear people say like you need a 4R, you need a 3R. I'm like, based on what? Like where? Like you don't need a 3R to be profitable. You don't. I never take 3R trades ever.
Well,
It's so
if you're
hard to
taking
get
a
that
three
spread.
R, yeah, a 3R trade, you're saying, okay, well, your win percentage is what, 33% for you to break
Something like
even.
yeah,
But why are you trimming along the way? Like, what is really the 3R? I mean, that's
yeah,
the other thing. Most people are trimming and locking in some profit along the way too. That's
yeah,
no longer a 3R trade, right? I mean, the whole risk to reward thing, like, uh,
yeah,
take a trade based on an entry, based on a probability, a data set that's going to take you somewhere, and
yeah,
trim along the way as the data probabilities get lower. I
yeah.
think that should be the basis among all of this. That's what's worked for me, and I can be walking proof of that.
It's there are certain setups with the IB,
I've
for example, that I will take bigger R, like 2+ R trades, but typically I'm not doing that. And one of the most important pieces of if you are going to take a 3R or something along those lines, and you don't hold your winners to your target, but you hold your losers to your stop loss, everything goes out the window. Your entire strategy goes out the window because if you paper hand your winners and you diamond hand your losers, your risk it's going to be almost impossible for your winners to be bigger than your losers because your profit targets are very far away. You know that personally as a trader, you struggle to hold on to your winners, but you set your profit targets so far, you're not going to be able to hold on to them. So then on the times where you're wrong, it's going to be almost impossible for you to actually for your winners or for your losers to be smaller than your winners. So super important that you don't need a 3R or like 2.5R for you to be profitable. A lot of people do 1-to-1, and that's totally fine. Like some of the trades that I take are not even always more than one. They're not even more than a 1R sometimes. If I have high conviction in something, like sometimes it's not more than a 1R, and that's fine. Because if I have very high conviction, then that's fine because I'm more likely to be right over time than I am not. And that's,
I agree. I couldn't agree more.
yeah, that's something where
People
I'm
get
like,
so caught up on that. Like, instead of worrying about that so much, why don't you worry about, okay, where can I take a high probability entry
yeah,
and a high probability exit? That second piece, like, let me say that again, a high probability exit. I
yeah,
think that's the piece that too many people miss.
yeah,
They have the level, they take the entry, and how many of them are like, okay, well, I think this is going to go this direction. They get excited. It does, the level works out, but then next thing you know, they move up their stop to break even and it comes right back out, stops them out. They
yep,
don't make any money
yep,
and they could have locked in a decent amount of, I mean, whether it's coming back to the midpoint of that orb. I mean, what if you shorted up there near that orb high today and you were looking for, like, I'm looking for the lows again. We go retest the lows, double bottom or something. And you didn't know, like, hey, there's data that actually shows the midpoint of the orb and stuff. Like,
yep,
that wasn't the best example from this morning, but it's just for the thought process here is you're looking for something, but you can actually put data, and you may have got stopped out break even, or not taking any profit at all
yeah,
because you did not have a planned exit at all.
yeah,
You had no
correct.
plan once you got into the trade.
Correct, 100%. And that's a super important piece that people need to understand. And what's nice is that we also, even specific to the gap fill, we have, if you were to enter at the open, if you were to just enter at the open, which I mean, to be honest, I don't personally like, I don't love that. I don't really recommend just spamming at the open, like spamming puts, just because the probabilities are high. But you can see here, This move up, so your drawdown, if you did enter at the open, would be 0.19%. This buy spike report right here shows you the average drawdown that you're going to be in if you enter at the open. So here, what this report
This
is
is
looking
something I need to add to my tool belt. Like this is one that you've mentioned it one or two times before to me, but
yeah,
I haven't like dove into this. So this is actually very interesting to know. Like if I do take this trade, can I size down maybe a little bit, just knowing I have a high probability, but size down, but I can size based on that average spike and know,
correct.
okay, I can give this, 0.20, 0.25
Exactly.
room and say, okay, where should I stop? Where should I risk to? But at the, because on average it's going to jump this high, or maybe I'm waiting on the entry. I mean, you could. That's
That's
the
what I was going to
beautiful
say. You
thing.
can
This
wait.
beautiful thing with this data is like the same. Like you could look at the same report that I'm looking at, and we could think two completely different things, and both of
Yeah,
us be right. But
yeah,
we're both using the data in our favor, just in
exactly.
different ways.
So just to recap what we're saying here, there's two ways to use this. So what this report looks at is only the gaps that have filled. So here's the gap up, and then here's the gap down here. But the gaps that have filled from the open, right over here, it's easier. It's probably going to be simpler if I go to a 1 minute. From the open, here, right here, to the candle that filled the gap, which is right over here. What is the high of day from here? So what this is measuring is from here, from here to here. Because if you entered at the open, let's just say hypothetically you enter at the open, you're very systematic. The average move away, or the drawdown that you're going to have, is 0.14%, which is from here, from the open to the 0.14 is right over here. So this is the average bounce, which means that obviously there are a lot that are higher and there are a lot that are lower. So in this case, you want to, if you're going to enter right at the open, you have to leave your stop at least to this point here, to this point, 0.14%. So at least to this area, or you wait for the bounce and then now you enter short after the bounce happened. And then now you can set your stop a little bit further out, but now you have your targets to be data backed in this case. So your entry is a lot more refined because you are waiting for the average spike here if you wait. Does that make sense?
And imagine like instead of eating a stop to start your day, you're patient and wait on that spike. Yeah,
Yeah,
instead of just and like okay, here's the spike in the other direction away from it. Now, from the opening candle, now
yeah,
I can look for my entry. Like that you're refining that instead of getting chopped out, especially that opening volatility. Take a trade and it goes on NQ, for example, it goes 20, 25 points against you. You take a few $100 loss to start your day. You're starting in the hole just to be right after that and maybe miss it because you
yeah,
stopped out. This is very important stuff here, guys.
yeah. And so I'm just going to show you guys another example. To be honest, this is a pretty unique example here, but this one today, so you can see this was the gap fill. This red line is the gap fill. This green line is the open. If you had entered right at the open, 100% you got stopped out. I mean, you would be crazy to take a 130 point drawdown looking for the gap fill. That would be insane.
What are you talking about? I thought that was normal. What's the stop now? Yeah, you're 100% right. This is a huge. I mean, what? Yeah. What do you?
So if you
And
waited for the spike down, you would have been able to get a much better entry to target. And also now your winner is also bigger because now you're getting a better entry. Now you can target this move back up. Now the average spike is definitely not 130 points on NQ.
no, and so
But
I mean that's the point too. The market conditions always have to be on the back of your mind, right? So
yeah,
like if you just take a peek at VIX and you see 20, you should know that you're going to be outside of the normal. I bet if you looked at the data and compared the data a month ago, 2 months ago, when VIX was at 14 or 15,
yeah,
compared to what it is now at 20, your average spike is going to be way different.
yeah.
Like
And
and you can actually, I'm sure you can filter that, right, Andre? I'm
yeah,
sure
yeah,
you can
yeah,
probably
yeah.
filter that. If you look at the last the last month, maybe.
When was it? December or January ish?
Yeah, because like if you look at how low
Or
it
even
was,
December. I'll look at December.
December, yeah, the month of December was a much different.
Well, the VIX spiked on the 18th, so I'll go from November 18
Yeah, go
to.
before. Yeah, before FOMC, the 17th or 12th. Yeah, something like that.
So look at this. The average spike on SPY was 0.09, which is obviously way less. And then you go to
Go from the 18th to go to the 18th, the end of the month.
look,
What a big spike.
double.
Look at that. Yeah,
This is the last month. Double.
there you go.
And guys, this is such an important. I'm so happy that we did this because this is such an important piece on how much the data can change. So now your spike goes from 0.9% to literally double. So now either that means you need to widen your stops if you're going to enter at the open, or you need to be much more patient with your
Size
entry.
down.
Exactly. You need to, well, yeah, of course, for sure.
Size down. And
Yeah,
yes, widen stop. Size down, widen stop. Know the
exactly. And
volatility. If I know I have to deal with a 20% spike across an index instead of a 10%, like that's double. I need to have double the room on my stop and half the size automatically. And I
yeah,
can use data to prove that and show that right now. I mean, we're doing this
100%.
live, looking at this. I mean, this is a game changer for people. If you
Yeah,
actually apply this data to your trading, this is an absolute game changer. If you're trading the same way that you traded a month ago, 6 months ago, a year ago, you're not nimble. You're not adjusting to the market conditions.
it's so funny. I just wrote.
That's why I hate when people say like I have an 8-point stop no matter what, or a 12-point stop no matter what.
That's
No,
insane.
why?
That's
You're
insane.
crazy. You're absolutely that. I want to run my head through this concrete wall behind me when I hear that.
Yeah, no, it literally it also makes no sense if you guys like have any concept of how markets change. Like that literally makes zero sense. Also, even if you were to look at like NQ on a daily chart, and for the guys who have been trading for a little bit longer, you're going to have a 20-point stop hypothetically at 15, 16,000 as now you're going to have a 20-point stop at 22,000.
Yeah,
It's a
I mentioned this the
completely
other day. Oh my gosh, this is like I thought this was kind of basic, but like people are like, well, when I started trading a year ago, I used a 20-point stop, so I just used the 20-point stop, and it's like okay, but our ranges today are 200 points compared to 120 points a year ago. Like just for the example, like what are
yeah,
we? You have to adjust to the market. The price is going up. The ranges get bigger. Use percent based. Don't use dollar based. Percent based.
yeah. It's I don't know. I thought it was pretty universal, but that's why we use percentages here because
But hey,
they're
maybe somebody doesn't know that. They're still learning. I get that. So like this is a huge teaching moment for people. Like,
yeah,
hey, the market changes, the pricing changes. Look at percentages. Don't look at point numbers because that value changes.
yeah,
16,000 in Q, 100 points was much different than it is at 22,000.
yeah, 100%. It's I mean, even if you just think about like the percentage of the move, like some people
Used to
might need
a dollar move on spot used to feel like a lot. Now we move $4 or $5 in a day, and like it's nothing.
even if you look, I mean, Nvidia is always the best example for me because it's just such a it had such ridiculous run up. But right over here, you're looking at whatever before the split. It doesn't matter. Let's just talk split adjusted. If in the 40s, price moved $4, that's a 10% move. Like there's no way it was moving
Easy math.
$4 back then. Yeah.
Easy math.
If price is moving $4 at 150, that is a much smaller percentage move that actually could happen, right? Like a few percent. Whereas, I mean, it's almost universal. I mean, it might have happened a couple days here, but stocks don't move 10% in a day. So when you go by dollar, it doesn't scale unless price has been in the same range, which like typically never happens. It either goes up or it goes down. So
Yeah,
look,
and the importance of this example is like what we're looking at, just to tie it together here for everyone. The we look at things, especially data wise, we look at things based on percents a lot of times. That's why we're looking at the percent on this spike, just for this one example. And this applies to so many different data reports out there. It's not just on this particular report that we happen to be on right now, but this is the perfect example.
yeah,
That's why we're looking at the spike and the gap fill by percentage. We're not looking at by dollar or point amounts.
Yeah, yeah, yeah. That's a super important for people to understand, and percentages always scale. Let's end it with that. Percentages scale no matter what. You can always be reliant on a percentage. You cannot always be reliant on dollars. Like in the beginning of the stream, I said SPX 100 years ago was at $4. Like if you're going to use a $4 move now, that's nothing. But percentage wise, that was a massive move back then. There is one other thing or two other things that I want to show you guys, and it's the what's in play right over here. So this what's in play section tells you all of the data you're going to need around the reports that we have as they're happening live. So for example, opening candle continuation, this report tells you how often, if the opening candle, if that first hour is green, how often does the day close green? So here it'll tell you the opening candle was green today. Here's your open, here's your close. Your bias should be bullish. Right here, initial bounce, broke out to the top side. Here's your IB size. Your current zone is within the IB, and your bias should be bullish because price broke out to the IB high. IB by rejection. This is another report that checks the order in which the initial bounce forms. If the high forms first, obviously all the tickers are different, but if the high forms first, it's more likely typically for NQ for the bottom to break, which in this case you can see the low formed first today, which means that price is more likely to break the high, which it did. So your bias here again is bullish. This is before price will break out of the IB. So I'll pull this up quickly. So you can see the low formed first, then the high formed, and you can see obviously the high broke before the low. So this report, the buy rejection, it's a sub report. The way that you use this is to say before the initial balance breaks out. Now today it happened almost immediately, but this helps you set your targets. If you're trading within the IB range, targeting that IB high is a high probability area. So this is another report.
That's something I've been doing a lot lately is that IB, I watch it. So I like what's in play because I can see all these different things at once, like on the like bullish, that kind of stuff.
Yeah.
And this IB report is something I've been leaning on a lot lately. When we haven't broken either side, it puts me in patient mode. Either I target that break for whatever direction price action looks like, or I wait for that break to happen. If I'm looking to play a reversal, this happened on Tuesday. I was looking to play a reversal, but I was like, this IB looks like it wants to break. Honestly, I would feel much better if it broke the IB first before I played the reversal. And the thesis played out. It was all based on this report that we're looking at right now.
Yeah, this IB by rejection. Yeah, this page is something that you guys should have up on your screen somewhere. Yeah, right there. Wherever it is for you.
It's on mine.
It should be up on your screens at all times.
Or at least another tab that you flip back and forth to or something. I just have it constantly, so I can just constantly go check it.
Yeah.
And it keeps me out of my own biases because I'll start looking at stuff and maybe I'm overanalyzing, maybe I'm overthinking, but I can check back and go, okay, wait, I'm going against 4 factors here. Do I really need to, let's check my emotions with data, right?
Yeah, 100%. And that's this what's in place section is based on one ticker. Now, if you go to the screener here at the top, this shows you multiple tickers. So what I like to do is I like to go to all, and I have the Mag 7, ES, NQ, SPY, and QQQ on here. And I have my 4 reports that I like to look at. Now I just changed, these move around.
I'm going to make a video on building this out later today, actually.
Perfect. That sounds great.
So I'll put that out for everyone this afternoon.
Perfect.
I'm going to make a video on building a screener out.
Yeah. And this to me, the way that I like to use this, it's exactly like the what's in play. So imagine you're looking at the what's in play, you have all the reports, except you get to look at multiple tickers at once. So for example, you can see all of the Mag 7 plus QQQ, SPY, ES, and NQ all filled the gap today. So that gap fill is no longer in play across the board. You cannot be looking for the gap fill. It already happened. Everything filled. Now, going down, this is my opening candle continuation for today. What happened? Only one of these Mag 7 and the indices had a red opening candle. All of the opening candles were bullish, were green, which gives my bias bullish for today. So to me, I do not want to be fighting the trend. I want to be looking at, hey, what are the market movers doing? And I want to be in line with that. So this is based on the report, obviously. We build the bias. Going down, you can see again, this is the IB report. All of the tickers here, all the Mag 7 plus the indices have broken out to the IB high except Microsoft. All of them have a bullish bias now.
Yeah, and like you can build this on your own. That's why I'm going to make that video later. You can build this to whatever. If you have a watch list, like if you're one of those traders that goes in and you're like, okay, I charted out a bunch of things last night. I'm looking at Walmart today. I'm looking at Costco today. I'm looking at Netflix. Like you can put those all on here and be able to see like your different trades all in one spot. The other thing is futures traders. So you can throw this to futures right there. Boom. First option, throw it to futures, whatever tickers you like. If you, I mean, maybe you trade gold and other things, but like for me, I put the 4 major indices, just like Andre just said. Look how quick that was. Now I've built this out. I'm a futures trader. I can look at this and I can say, okay, look, I've got bullish, 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 bullish. Everything's bullish on the opening candle. Everything's bullish on the IB. The gaps are all filled. Like I don't have to worry about a gap fill playing around with me anymore. That is absolutely beautiful. And obviously you see down that left side, just like it was on Amazon.com, I have all the options. I was on Amazon ordering a monitor the other day, and I thought of this actually, this exact thing. I was like, okay, this is the size monitor I want. So like I was like going down, and I'm like, this is the same way I'm using Edge every day. That's kind of that was a weird like connection I just made in everyday life. But I actually the setup on this, kudos to whoever came up with this idea, because was it you? I don't know if it was your team, whoever it was. That's fantastic because you can filter things as you like them and get to them quickly. I mean, what a great idea, by the way.
Yeah, thank you. It's
does it have Prime? Is it going to get here in a day? Like,
yeah, exactly.
That was funny.
And we have like our team is very, very conscious of the feedback that we get, and we obviously have a great designer, and we are extremely conscious about like, hey, this interface doesn't make sense. This user experience doesn't make sense. Like, can you change the way that this looks, or this is not clear, or whatever else? We want to always make sure that we are taking the feedback into consideration. And if like, I mean, the reaction to this sidebar has been great. So obviously we're very happy about that, but we want to make it literally as easy as humanly possible for people to navigate this and for people to move things around. So like right before, I didn't have YM or RTY on here. So I literally open this, click, click, click out. There they are. Everything is done. And the other thing that we added in here based on the feedback was, can I just click on this and go to the report? So right here, if you notice that when I hover on this, this is going to turn blue with an underline. This is a link now to the IB by rejection on whatever I click on. So if I click on IB by rejection on YM, for example, now I'm on the IB by rejection with the YM report selected. So this is super important for people to understand. I'm actually not on the buy rejection. I'm going to mark that down actually. But it would be great if you can assign what's in play to watch list and have multiple. Can you elaborate on that? Nothing to see here.
Yeah, I'm curious what that is, because building multiple watch lists out, because that may be an interesting idea depending what you mean by that. My brain's immediately going to like, okay, here's a watch list for futures. Here's a watch list for, 5 or 6 option stocks that I'm trading today, or maybe swing. I don't know if what you're getting at there, but of course, Andre, can you save the what's in play? Like if you're on stocks, for example, like you were originally,
yeah,
and you get the tickers that you want in there, can you save it to a maybe some type of like list?
So right now, if you were to leave it as is and leave and come back, it's the same thing. Like we save everything. So when you leave and come back, what we're going to add is different views. It's also going to be applied to the what's in play as well. So pretty much like if you have a morning view, or like, for example, like the power hour breakout is not in the morning, obviously. So I could have my stock watch list, futures watch list. Yeah, you can combine them too for the screener, by the way. So if you go to all, you get to actually pick what shows up in here. So if you go to this number 2, select tickers, you can have everything show up, including stocks and futures. So you can have that in here, and you can add and remove stuff, and it'll all save. Now we're going to add the views here, so you can actually save a certain set of reports. So for example, if my morning setup is gap fill, orb, and previous day's range, then I can have like my morning view and I can pick what it is. Or if I want to have my afternoon view, which would be power hour breakout, whatever, and all the other reports, you can save them like that. The same way that you create custom sessions.
Yeah, maybe you have like a normal watch list and then a watch list specific to some positions you're in, or like that's an interesting idea actually. That's nothing to see here. I actually like where your brain's going on that.
Yeah. The
Which it does save, like you were saying, so it does save. So like I went in and I put the future stickers that I watch, and so every time I come back, it automatically has those 4
yeah,
indices just sitting there. Like I took off gold, I took off CL because I really don't. I watch those things. I just don't really trade them that much, and I don't think they have the same bearing into my trading. So like, yeah, so I don't have them on there personally, but every time I go back, it saved whatever changes I made. But I do like this idea a little bit, Andre, to have, maybe you have your 5 or 6 bread and butter stocks that you trade the options on, but you want to have a second watch list with like 3 or 4 that were hot on your list for the week or for the month or something.
Yeah. No, we can, and we're going to be building out different sets of bookmarks, different sets of like, there's a lot that's coming that's going to be in like a lot of customization that we're going to have, pretty much is the short answer. So that feedback is definitely noted, and we're currently working on a lot of that type of stuff. So it's good. Outside of that, I don't really have anything else that I want to show you guys. One thing that I'm going to mention is that every page has this button and these videos. They will tell you exactly how to actually use these pages and how everything works. So for example, in this video, I go over and I can say, for example, like I'll go to the gap fill for a second, and you can see, I'll go to all. Let's say I want to filter for only the bullish. Well, number one, you can sort and filter everything. You can reorganize it. If I want to filter only for bullish, then I can go here and I type in bullish, hit enter, and now it's filtered out all my stuff here. So this is the way that, just like more minor stuff that you might not know, the videos up top are going to be the place that you want to go and understand how to actually use or navigate these pages. Every page has one. But I mean, other than that, I'm all set for today in terms of my explanations or anything like that.
Yeah, definitely. If anybody in the crowd has any questions here, kind of toward the end of the stream, would love to hear like what your thoughts are as far as like if you're using Edgeful and you're having trouble like figuring things out. If there's something that maybe you're not sure how to use, I would love to look at that while we have Andre here.
Yeah.
And if you haven't tried out Edgeful yet, first off, what are you doing? First off, second, like what's something that what's your hurdle? Because we could take a look at that. We could address some of that. If there's something that maybe you're concerned, like, oh, I don't know how to apply this, like, because that's the feedback that I get the most from people that are first wanting to try it out. They're like, well, I don't know where I don't even know where to start or whatever it is. And so if there's something like that is on your mind, hey, shoot that in the chat right now. We'll take care of that. Nothing to see here wants to know what we were trading today. To be honest, there's not a whole lot that I like. I mean, you're going to probably get some dead cat bounces here. We're falling back. I mean, IB, we couldn't break out of it. We broke through it. We pierced it, but now we're coming back down a little bit here. We're above the orb. We back tested orb 30-minute that I use perfectly. So the bottom of that wick, you can see right there. Perfect back test of it and a bounce. That was a good scalp opportunity if anybody was playing that for the long side. But if we fell that, this thing looks rough for the rest of the day. We also, that 694 area that I was talking about, right there where his cursor was sitting, 694, right in there. So
Yep.
you see, when we spiked up and we got to kind of the target I was talking about, this is that previous low. I wanted to see a reclaim and hold of that. Initially, we did, and you had a nice move, like a 50-point move again off of that level. But now we've failed that, and we're failing to hold over that, which to me is, the bulls tried to reclaim that previous low from January. Now we're back below it. It's not the best look just from a structure type of play here. And we do have, I can't get the previous day's range data out of my head, even though I know we moved up nicely. We have some other bullish stuff. Anytime I don't have everything, like the more things we can put in Confluence, this is something to talk about real fast. The more things that you put in Confluence, obviously, the better your probabilities are. If you have 3 or 4 reports that are all strong probabilities in a certain direction, that's much stronger than if you just have one, right? So I start looking across the board here a little bit and seeing, okay, what do I have in Confluence? What do I have not? When I see multiple things against each other, that's when I think, okay, the market's a recipe for chop, for a range bound type of market. So for example, we took out the previous day's low. We're nowhere near the previous day high. And do we close green today? Maybe today is that outlier. But I'm just putting 2 and 2 together here, looking at, okay, we tried to break out, we're fouling back under. If we foul the orb and go back into kind of that opening 30-minute range, it's starting to feel like a failure to reclaim. We have already broken the previous day's low, so we know that the probability of a green day is pretty low, actually.
Yeah.
So I would expect us to probably close in this area. Now, the morning price action probably got a lot of people excited. If you chased it, hopefully you locked in some profit. But if you're chasing it now, your risk to reward is not very good, in my opinion.
Yeah.
And trading for the rest of the day, I just think could be a really tough ask. I mean, we saw this same trend play out the last few days. A morning move up and then just fall apart in the afternoon.
Yeah. Yeah. And previous day's range, all like we opened below yesterday's low. So that's an important piece too. So if I go to the opening stats report, oh, well, not all of them did. So you can see opening stats will tell you how many of these opened either above or below yesterday's low. You can see right here, there was 5 that opened below yesterday's low and the rest opened within yesterday's range. So, yeah.
Here's a good question.
Regarding IB by retracement, it only measures the deepest. So let me explain this. This is super important, actually.
Yeah, I want to hear the full explanation on this because I've looked at it a few times and started kind of paying attention to it, but I haven't really fully grasped it enough to put it into my trading yet, but I want to.
Let's go. I know there's a few good examples here, so give me a second. IB. Just give me 1 second so I can pull this up. Okay, I'm going to look for. There's a specific debt here. This is a very good example of this report. By the way, we're going to add the ability to bookmark subreports too.
I like that.
Which
I
is
like that
so
idea a
huge
lot.
because it'll be way
That gap fill by size is the first thing I go to every morning.
Yeah. So yeah, that's one thing, just FYI. So by retracement, so what this is looking at, we're looking at ES here. So number 1, this only considers single break days. So right here, breakout, right over here. Breakout is when it breaks only to the top side of the orb, or to the IB, like it did in this day, only to the top side, not the bottom side. Breakdown is when it only breaks the downside. So each one of these is only single break days. If it's a double break or a no break day, not considered. It completely ignores it. Number 1. Number 2 is it only starts counting the retracement after the first break. So what that means is it's only going to start to count how far back into the range it goes after the first one. So if it does, let me try to find a different example here. Let me try to find. So pretty much, oh, that's not a good example. One sec. Okay. This here, none of this price action is considered in the buy retracement. This
that hadn't broken yet.
Because it hadn't broken yet.
You can't retrace something you haven't broken.
Exactly. So you have to wait for the first break either to the top side or to the bottom side. So in this case, this would be the first candle. And this ended up being a double break day, so this doesn't even count. But like if you ignore this candle, like if we pretend that this was the price action for the entire day, it would have retraced back to the 50% mark. Now, let me go back to this day here. So very important note, you are only looking after the first break. So this has to happen after 10:30 Eastern time, or the first hour. We have the customization. I have the customization set to the first hour. You can do this on whatever time frame you want. It doesn't really matter. Now, from here, this report, this breakout report and the breakdown report are going to tell you how often price on a single break day is going to reach each of these levels. So you can see there is a very significant drop off from the 25% retracement to the 50 to the 75% retracement. And you can customize each of these levels right here, number 8 in the customization. At the bottom, you can change these to be literally whatever you want. If you want to do 5, 10, and 15%, it doesn't matter. But the way that I interpret this is if I have a bullish bias, then if I'm buying the breakout, 60% of the time, I'm going to be in drawdown at least to this point here, at least to this 25%. So personally, I don't want to be buying the breakout. Now, there will be days where it just breaks and runs, where it does this, and that's fine. You can trade that differently, or you can just not trade it at all. But the way that I like to look at this is if I know that 60%.
What was that last thing? What was that last thing you just said?
There will
not
be
traded it. What is that? Not traded at all? What does that mean?
Yeah, I know, right? Yeah,
you don't have to trade every move in the market.
I saw your tweet that cash is a position.
It is. Flat and cash are a position. People feel like they have to be in a trade every single time. When the probabilities aren't lined up, I'm not in a trade. I'm just not in one.
Yeah,
sorry. That's kind of a funny little like stick that I'm making right now. Is when somebody says like you don't have to take the trade, like it's like that is true, and that sounds simple, but I feel like too many people get caught in this like I have to be in a trade. Like okay, we broke the IB to the upside, I've got to play the retracement back down. You know, because I missed the long, now I got to take the short. Like you don't have to trade that way.
Yeah, it's being cash is actually really important, but it's important because you are probably more likely to lose money on a C setup. Actually, what I'll say is if there's a setup that you're really not sure about, that you're not really sold on, and you take it, you know that you're going to be way more upset when you take that loss, knowing it wasn't a good setup or knowing it wasn't a good trade. Whereas for the most part, those are going to be the setups. Like if you just didn't trade most of the setups, you would probably be better off than if you did take every single one. Like in this case, you buy the breakout. Like for the most part, you're going to be in drawdown. So being cash or waiting for your high, like your A+, your B+, your A- setups, that is super key to avoid being in bad conditions, being in choppy, crappy trades. So I'm actually going to go, nothing to see here. I'm going to explain what my rationale is and the way that I interpret this. So if I know that 60% of the time on a breakout day, it's going to reach the 25% mark, I am interested in my entry being here. Now, this is where the data really starts to drop off, is that only 22% of the time on a single break day, price is going to reach this 50% mark. And then only 7% of the time, price will get to this 75% retracement while still being a single break day. So I don't know about you, but I think your trade is well invalidated. Your bullish trade is well invalidated before it gets to the 75%. You do not want to see price come and do something like this and then be like, yo, I'm getting long here, expecting price to continue higher. Like you at this point, only 7% of the days in the last 6 months has price come all the way down and touched this point and then and then bounced. Like once it gets here, at least the way that I interpret the data is once it gets here, you know what? It's probably going to be a double break day. And I'm not interested in that.
Yeah, and I don't want to play the double break because of the low.
Yeah.
I think that speaking of risk reward, not based on points like we were saying earlier, but just risk reward in general. Yeah, that's a terrible risk reward because it's a low probability that it happens, but you can't ignore what's on the chart either. So like sometimes it's like, hey, here's where flat needs to be my position.
Yeah, exactly. And I actually would say that if 22% of all days that actually got back to this point here were still a single break day, then you know what? I feel like my trade's kind of invalidated somewhere around here. Now, it doesn't have to be 50. It could be 60%. So if I go over here and I change this to be whatever, 60%. Right here. So now, if you go
literally playing along with you over here, like I'm charting this as you go because I'm like, this is really interesting stuff.
So now I move this to 60. So now in my settings on my indicator, I move this midline to be 60%. And what you can see is that only 17% of the time on a single break day, price is going to reach this point here and still be a single break day.
Go to today's price action. Are you on SPY or yes? I don't think it matters either one.
Yeah.
This is gonna blow some people's minds here. What time are you on IB?
Yeah, I'm on the 1 hour. Are you on the 30 minute?
I'm on 1 hour IB on SPY.
Okay. Does that look the same?
Does not look the same.
So I changed this, or do you have this at 50%?
Oh, it's yeah, that's fine. That's fine. I'm sorry. I forgot you just changed that. Change that to 50. Do we need to say anything else?
Yeah, this is pretty insane. Did it touch? Did it touch? I don't think it touched. Wow. Look at that. Is that 1 cent? That's 1 cent. Right
one penny out of $586. Like what are we doing here? That's as close as you're gonna. I mean, that's not close enough for you. I don't know what is.
Yeah.
This is why I started looking at the midpoint of the orb and the midpoint of the IB, because I've seen reactions on. And look at the candle before it even. This is before the look at. You see the first one? Go back to your left a little bit. Look at that other touch of this line.
This one here, yeah.
No. Go back.
Right
well,
here?
that one too, but no, the big white candle you have where it
This
touched
one.
the same 50% before the 50% was like that's before it even formed.
This.
How wild is that? The next, yeah, you see that?
Here,
right
here,
there,
here,
right
here.
there.
The 50. Sorry, this one right
yes,
here.
Yes. So look at that. Before we even formed the IB,
yeah,
it touched where this area would have been. That tells you that the IB is developing off of something, right? I mean, there's things happening here to pay attention to. But so not only do we know that the midpoint of the IB and the orb both can be reaction points, we know that just from watching it over and over, but we also can look at the data and see how often this happens. So like you fell to hold a break-in base above an IB or an orb, you're usually going to come down to the 25 or the 50% retracement of that range. You have the data reports on Edgeful to show you how often this happens. So not only can you play this down to that point, but that should be a profit target. And you can look at on the report itself that he was showing us a few moments ago, you can look and see how often does this happen? How often do we come back to the 50% level and touch it? Which is funny. On this one, we didn't touch it. But that's pretty close. I mean, like let's not miss the forest for the tree in front of our face here. Like, that's basically played out with the probability there. And if you're looking for beyond the 50% retrace, your statistics are super, super, super low.
Yeah,
once we broke the upper side, now look how low your statistics are going. You go from, a 20, 22, 25%, whatever that is. I can't, 20 something percent. Yeah. So So you're going from that probability to less than a 10% probability that you're going to move beyond that level.
Yeah,
Like let's close out some shorts here if we're counter trend trading that. Close out
100%.
your. I mean, there's a perfect spot to have. If you took a short off of the IB failure, that is a perfect spot to have basically full target. I mean, that's basically full target.
This is what he's saying here.
A live example right now.
Yeah, this is exactly what he was talking about here. And yeah, we do have, so just so everyone knows, off to the right side, right over here, if you can see my mouse right over here, off to the right side, this is where you can request as part of the Edgeful plan. The indicator that I've been playing with is
included.
It's included. Yeah, we have one plan and everything is included. So you put your TradingView username in here. You can find your TradingView username up top, right here in your profile section at the top left. Mine is Edgeful. Yours will be whatever it is. Put that in here, click update or click get access, and then go to your indicators section, and you're going to have all of our indicators right over here. You get all the new ones that we released. We just built one for opening candle continuation. We're going to get a bunch of new ones too, but they automatically update for you too. So like any improvements that we add to this, like we added these midlines, we added the extension, we added the levels, like they will automatically update for you. So yeah. But
I love that there's two versions of this too, because I like looking at this one for retracement, but I also like looking at the other one, the IB by levels.
Yeah.
How far can you go? Whether I look at it from an org perspective sometimes. Say that again?
So if you want just the IB by levels, we have that, but we added the by levels into the regular standards, so you don't need to have multiple.
Oh yes. Yeah. That's what I meant to say. I don't know. Maybe I misspoke there. That's what I meant to say. Yeah, you can add the levels on there. So basically, you're looking for. I mean, for the math people out there, it's basically a standard deviation, right? It's one range. So if the range is 100 points, you're looking for, okay, what's 50 points above that? What's 100 points above that? So you're moving that same amount of the range, or one full standard deviation or a half standard deviation above what that opening range was. And we know, once again, that those are reaction levels that people in the market, people that are way bigger than us, right, are paying attention to those levels. And so when you look at this, you can see, there you go. That's, one range based on the opening range, that's one range higher. Yep. And you'll see not only do you get reactions around those areas, whether it's profit taking or whatever, you also have data. Go figure, right? There's data behind this. There's something we can actually look at and say, okay, we break through and this is for profit targets. This is something I've been trying to hammer down a lot lately. Yep. When you break out, let's say we break out and get continuation above the IB today or above the orb, either one, where am I going? What am I looking for? I'm looking for these extension targets. Look where we close this day at. This is exactly at the 1.0, isn't it?
Yep.
So, wow. Okay, there you go. I look at this and I just get excited because I look at this and going, okay, look where you pulled back to. You could start getting long there, risk below the midpoint, and you're looking for that 0.5. Yep. And you notice at that 0.5, it kind of paused and then it supported on it, and then it went to the 1.0.
And this is where you take the majority of your profit. Yeah, yes. This is where you take the majority of your profits here, because on the SPY,
69.
Yep, it's gonna come. 69. It's gonna come to that 0.5, and then the odds of it going to the 1 really do drop off. So this is where your runners go. So you still can capture that move, but this is where your runners go.
And even look at how far it drops off beyond that. So I'm trying to capture the bulk of the move. If you go back to the stats real fast, I'm trying to capture the bulk of the move. I need to take off the bulk of my position at that 0.5. I need to take off pretty much the whole rest of my position. Whether if I'm holding, half or a third, I need to take off almost all of that at 1.0. And then any runners, maybe even scale based on these. Like that would be a strategy you could build around this. Like if I took a full position, maybe I need to scale out 70% of my position at 0.5 because the data tells me that's how often we go there. Maybe I need to scale out another, 20 something percent beyond that. I don't need to have more than a 10% of my position going towards something that only happens 10% of the time. I feel like you could build a strategy that way too.
And I have this filtered for break. So you can filter this in the customization for breakout days, which is to the top side, for breakdown days, for double break days, and for all days. So obviously, if today is a breakout day, you want to look at the relevant data, which is this piece here. If today's a breakdown day, and you look at breakdown, you see how often these get touched. Now, to the downside, actually, the stats are better for these levels. But so like 74 and almost 50.
When the thing breaks, it breaks.
Yeah, exactly. So,
which is interesting because you'll hear people say, well, shorts move faster or the moves down are more violent and stuff. Well, hey, guess what? I can actually prove that with data.
exactly.
Everything comes back to data at the end of the day. Like it really does. And I don't think people, maybe people don't grasp that, but I can't stress that enough that everything can be explained and come back to data. These percentages seem to be almost Fibonacci. I mean, it kind of is in a way. It's not the same, but and actually there is data based around Fibonacci. If anybody is curious, there is a Fibonacci indicator data that they can put together and tell you if you open here based on the retrace of the previous day. So we don't have to go into that, but there is that ability.
That one's a little bit more complicated. I do recommend actually watching the video for that one because which is always right down
here. The point here, so Fibonacci, a lot of Fibonacci is just based off of human behavior and stuff, right? Yeah. Well, this is based on data. This is based on what's really actually happened. So instead of just guessing based on Fibonacci, which I love Fibonacci, but just instead of just guessing based on Fibonacci, we're taking historic data, things that have actually happened in the market, whether it's over the last 6 months, the last 5 years, whichever data set you want. You're taking actual events that have happened and you're saying, okay, this is happening this amount of the time. It's, you have to put 2 and 2 together a little bit here, but 2 and 2 is not tough math. So I think if you start building into this edgeful stuff a little bit, you're going to see, there's obvious patterns that happen and there's a way to profit off of this. I think a lot of us are walking proof of that. I don't know what else to say there.
Now, I want to show one more thing, the ICT opening retracement, because we spoke about this before, but I do have to run to the bathroom before
go for it. Go for it. I'll do a little market update while you're doing that.
I just tried to fill my coffee too, and I have nothing left. So that's.
Well, I was trying to speak on mute this entire time anyway. So.
All right. So let's see here. Okay. So ICT opening retracement. Let's talk about it. Looking at NQ.
And if you're one of those people that don't get triggered by the name, whichever side of that argument you're on, just don't get triggered by the name. This is literally an opening retracement that's data quantifiable here. It's very interesting because I've watched this thing play out a couple times, and I'm very interested in this actually. This one may be even just a personal thing here. I just want to learn this anyway while I have Andre on here. So if you want to follow along.
Yeah. So okay, ignore the name. To be honest, the concept apparently is like the midnight open or something like that. I'm not really sure. But the reason we called it the opening retracement is because we allowed you to customize the open, high, lower, close of the candle and the time of the candle. No, definitely not the inventor. But so what this report looks at is how often is price within the New York session or within the session you have selected going to retrace down to the midnight opening price. Now we have the indicator for that will automatically plot, which you can see these blue horizontal lines. So all these blue, so I'll just hide this for a second. All these blue horizontal lines are the midnight opening prices. And then you can see when we are looking right here, the New York session opens above and then it comes down to touch the midnight opening price. So all it's doing, it's literally like a gap fill, but instead of using previous close, you're using midnight price. So right here, you can see, and now we're going to go through the buy weekday. We're going to go to the buy size, obviously, because that's where the odds really start to change. But in the last 6 months, NQ, when the New York session opens below, 64% of the time it will retrace and rise to touch that midnight open. And then 55% of the time when it opens above, which is what happened yesterday, it will come down to touch that midnight opening price. So here, today was an example where it opened below and then touched. This yesterday was an example of above. Here's an example of it not touching at all. So at no point during this New York session did price reach this blue line. So that would count as not retraced here. Now, if you were to select, which I'm not sure how many of you trade the London session, but if you guys were to select the London session here, it is completely changing where price is opening. It's still referencing the midnight price, but your opening is very different. So obviously we're using the open of the London session and not the open of the New York. So you can see here, price did open above, came down to touch it. Here, this one opened below.
I have no idea, by the way, just throw this. I have no idea why midnight would be any type of point, but it doesn't matter. Like I think that's the point I want to make here. I have no idea because I looked through this a couple times. I said, well, that's not like one of the Asia close times. It's not London open. Like I don't know why midnight is like a thing, but there's obviously something to it because we have data that shows pretty nice probabilities for it.
Yeah.
So the point here is I don't care why, I care what.
Exactly.
What is happening here? I don't care why. I really don't care about the why at all. I care about what's happening here and where I can find an edge in the market.
Yeah, and you can change the times. You can change it to be 3 a.m., whatever you want. Anytime, obviously, before the open of the session that you're looking at. So in this case, you can go from midnight to like any time.
I saw somebody do this. They changed this report to the London Open.
Yeah,
and looked for retracements to the London Open, and it was a decent percentage too. But that just to say, this is super flexible. However, if you come up with your own strategy, you find your own edge. Sometimes slow market, go in here and just surf some of these reports and see what you can find. See what probability sticks out to you.
For sure. And again, this is all customizable. We did it on purpose. That's why we didn't call it the midnight open. We called it the opening retracement because you can't. It's not. If you customize it, it's no longer the midnight open, obviously. But going to the weekdays here, and by the way, we don't have this report on stocks, obviously, but we do have it on Forex, crypto, and futures. So because there's no midnight price for stocks, obviously.
Ooh, I think that would be interesting on crypto. You just triggered a thought in my mind. I bet
we
crypto probably pays attention to that midnight open.
Yeah, and so if you go through, you can see that certain weekdays, like for example, Tuesdays, high probability for when it opens above. Mondays, not so much. So you go through and you can see here that certain weekdays will obviously behave differently. So like Tuesdays, for example, are really the standout days for when price opens above, like without question. Now, the other important piece, now if it opens below, you have in the last 6 months, you got pretty solid across the board. Besides Monday and Tuesday, Wednesday, Thursday, Friday, you got solid odds right here. Now, very similar to the gap fill, the buy size is really important. So if we're super far away,
I use the buy size with the gap fill and like in this case too. I think of it as like, okay, if we get too far away from something, there's a different trend type. Like that's basically setting a trend instead of like we're in a range. So I think about it that way because I had this question on the stream the other day. They were like, okay, well, obviously the percentage is going to be higher if the gap's smaller. I'm like, well, yeah, but there's a big discrepancy there, because I think about it as this: if we have, we trade in ranges and then we trend away from those ranges. If
Yeah.
we're in a if we're within 50% a move, right? If it's 50% or less, if it's 40% or less, the
Yeah.
smaller percentages of the gap size, I think of it as, hey, we're still within the range, so it's more likely that we're going to push back up.
For sure.
But if once we get beyond a certain percentage, obviously that probability is going much further down, and somebody's going, well, yeah. And I'm saying, okay, but think about it this way. Now you're basically getting to a point where we're now trending away. The market is now
Yeah.
trending. So it's a trigger in my mind to think about it that way. And that helped me understand why the data is so important there.
Correct.
Just to throw that in.
100%. And that's where the buy size, almost like universally, is going to be really important, because you don't want, like, if there is a massive gap, right? Let's say like a 2% gap, usually there's going to be a catalyst for it. And therefore, when there's a very big catalyst, you don't want to be trading like it's any other day. So you want to be accommodating that catalyst. You want to be focused on it, and you want to make sure that you're not treating it like, oh yeah, now I just have this massive gap fill that I can just trade all the way back to the previous close. Like, it's not the way you want to do it. The data doesn't show that. And that's not my opinion. That's obviously data backed. But when you go to the buy size variant here on the opening retracement, you can see that the bigger you go in terms of the distance from the opening retracement to the open of the day has a huge impact on whether these things are going to fill or not, or like retrace or not. So really anything above 0.4%, like, you don't really want to go for, to be honest. Like,
no, that's getting into that trend territory, in my opinion.
Exactly. Yeah, exactly. So that 0.2 to 0.39 is, so pretty much like anything below 0.4 is the one that you're going to want to use here.
Or maybe look at maybe start looking at half gap at that point, like we showed earlier.
We actually don't have the ability to do that.
Oh, we should add that.
Yeah, we should add that.
Well, I mean, but on the gap, so we can do that on the gap fill, but that would be, hey, maybe we should add that to this.
Yeah,
like a little brainstorming session here.
Yeah, exactly. So like a percentage retracement, so that, like, for example, this one.
Here's an interesting point, by the way, not to interrupt again.
Yeah.
There are a lot of candle closes people watch that do happen at midnight Eastern.
That's interesting. Actually.
That is a very, very solid point there.
Yeah. I mean, that might be it, to be honest.
I know, like, with crypto, it's definitely a thing.
Yeah.
And I know with like the Global or the whatever, if you look at futures on the 24-hour chart, but usually the 24-hour on futures is normally from 6 Eastern for the day candle, right?
Yeah.
But people look at things different ways. But that actually does make sense that 4-hour candles might be closing then, just depending how you have your settings.
Look at this BTC by weekday here. So look at how this change is going from Monday through Sunday.
I figured crypto would have some type of reaction to this midnight, because I've noticed this. Wow. So if you're looking, this is what I'm talking about, surfing reports and finding an edge. This is how I found that Thursday when I was pointing out earlier on gap fills. So it's going through reports and looking for high probability things to happen.
Yeah.
So if you're a crypto trader, or maybe you're, even if you're not, you're just a trader in general, you see how you can find edges just by surfing through some of these reports. On a day like today, we've been chopping for the last 2 hours, hour and a half. Go search some of these reports. Do some of your homework. Find your edge in the market. I mean, that's how I found some of these things, and I found these high probability setups. I'm like, hey, that's something I'm going to pay attention to. Maybe, hey, look, maybe I take this report and I go, hey, let's throw this on the old watch list over on the right side. Let's favorite this report a little bit.
Yeah, and I mean, you can see with BTC, like, the buy size is just ridiculous too. Like, you got solid, even, I mean, really, even to the 1% mark on BTC is like, and what's nice about these indicators and what's nice about, like, all this, whatever, I'll just pick one. What's nice about the indicators is that automatically it'll adjust. So we just switched from NQ to Bitcoin, and now everything is like the same as it was before. So,
yeah, and another thing whenever you're looking at this, there are two ways to play this. You can play this to fill, or you can wait for it to fill and play it the opposite direction. If
Yeah.
you know, like, hey, this is probably going to happen, but the prevailing trend is the opposite way, maybe I wait for my entry for a gap fill. Maybe I
Yeah.
wait for an ICT opening retracement. Maybe I look for that midnight retracement to happen before I take an entry on something. Maybe it
Yeah.
tells me, hey, there's actually a decent probability. Like maybe I'm wanting to trade away from where that is because the trend is down, for example. But this is telling me, hey, we should retrace back up to it first. There's a high percentage chance, it's more than 60, 70%.
Yeah.
Maybe that keeps me out of a bad trade or out of a drawdown.
Yeah.
That keeps more money in my pocket, right? Like
100%.
there's multiple ways that you can approach this.
Yeah. That's why we don't tell you what to do with these reports. Like, it's the reason why we don't have like, hey, this is what to do with this. Because you can look at this and say, hey, okay, I want to wait to do X, or I can look at this and say, I want to wait to do Y, or you can do what, like, I mean, there's a million different things that you can do with this. And that's such an important reason why we don't give you signals. Like, we're not going to tell you like, hey, this is like, you should enter here. Here's your stop loss. Here's your profit target. Like, we're not going to do that. We give you the information so you can interpret it the way that fits your personality. Like power hour breakout, for example. Now, obviously, we're talking like if we went to like Tesla or something. Like if you want to sell spreads on Tesla, in like the way that I would interpret this is like I want to sell spreads on Tesla, but like iron condors actually on Tesla or on SPY or whatever else has like a good probability here. But like someone else might not think of that, or they might not be an options trader, and that's a completely different situation for them. And like they need to interpret this differently. Or like you can use that, you can take your profits before a new high of day because you know that it's not likely to get there. You can take reversals at or near a new high or a high of day, expecting it not to break. So there's always a million ways to use this stuff here. And yeah, I'm. It's always interesting to me to see how people actually use it, to be honest. But I always think of different ways, even when like you and I talk on stream or off stream. I'm like, oh, that's an interesting thought.
Yeah, okay.
Yeah.
I go to the X feed on your on y'all's account sometimes, and I'll like scroll through and see, okay, because y'all retweet and do a lot of like different creators and different traders out there that are using the reports, and I'm like, okay, I didn't think about using it in that manner, but that's very interesting, and I can learn something that way too.
Yeah, I highly recommend that you guys follow us on Twitter/X. We post a ton of these reports. All the new updates that we have are going to be on there, so I highly recommend that you guys follow us there. Obviously, we're doing this stream on X right now, which is great. But those of you who are watching on YouTube, check out the X, the Twitter account. We do post a ton of thanks. We do, and we got super lucky with that handle too. It used to be Get Edgeful, but we got the actual Edgeful, which is awesome, which I was like unbelievably happy about.
That
like,
is a tough thing to do.
Yeah, unreasonably happy that we got that handle, honestly.
I'm surprised they didn't try to charge you like 3 arms and a leg for that.
Yeah, it was. We made it happen. We
we've been through that over on the Wolf side, looking at a couple things before.
Yeah.
It's like these people are crazy, and you see some that haven't even touched the account in like 10 years. Like some people are just create usernames and hold on to them, and try to make a business play out of it. It's like,
I know.
What are we doing?
But yeah, I mean, what else?
I don't know. I think we hit a ton of stuff here. I mean, this has been a fantastic stream, Andre.
Yeah.
I absolutely always enjoy having you on here. I mean, I learned stuff. I know our audience learns a lot every time you come on. We really appreciate your time.
Yeah,
and like I was saying earlier, if you throw back up a chart, even if you look at what we've done since that first move, and maybe this is a good ending piece here. So this first move that we had was a nice move, and we've essentially chopped. We did have a pullback. I mean, if you're a scalp trader, you could have got long or short a couple times here, but we're essentially in a very chop consolidation thing. We're same price we were at a couple hours ago, right? Lower
Yeah.
highs, higher lows. The market's kind of figuring itself out. We have data that kind of goes against each other a little bit. We broke a previous day low, which is a bearish, but we have a few things on the bullish side. That's a recipe for chop. That's one way that I use Edgeful very, very, very often is once I get some type of move in the market, especially early in the morning,
Yeah.
I lock in my profit. I usually sometimes lock up the account. Maybe I go to a different account for the day. Um, but a lot of times I'll just step back and wait. Like, okay, let's let the market resolve itself here. But if I have there's two decent ways you can look at this, in my opinion, or at least how I do it. If I have multiple data reports conflicting with each other, I know that there's a tug of war chop scenario that I don't want to be a part of. I don't want to get chopped up in, right?
Correct.
The other thing is if I see two indices with complete different, which we don't have that right now, but if we did, if SPY has broken a previous day high and QQQ has broken a previous day low, for example, and I've got two things pulling in opposite directions,
Yeah.
I don't want to be a part of that action. I want to let the market figure itself out, see who's going to win that tug of war. I don't want to be a part of it. That's something that I've found super super helpful in staying out of bad trades. People look at indicators, people look at data, and they always have this mindset of how do I find enough confidence to take a good trade?
Yeah.
But I think people miss the step of not taking bad trades. Wouldn't you say that, Andre? Wouldn't you say that? I feel like that's half the battle. Is like you can find winners, you can find winning trades, but how do you stay away from bad scenarios? And
To
I
be
think
honest,
if you use Edgeful and you use some of these sentiment indicators that when you start seeing things that disagree with each other, that's you have no confluence. I mean, look at this. like look at these different tickers right now pulling against each other.
yeah. This to me, where I start to see this type of stuff, like I'll make this.
Look at your market. Wow. So I mean, that's sticking out to me right here. Look at your market leaders. So look at Microsoft, look at Nvidia with bearish sentiment, but your QQQ and your SPY have bullish. That is your big players are pulling different than your broader indice.
Yeah, the best way to
No
check
thanks.
and the best way to look at this is going to be the screener page. What I think in terms of like, is today going to be a great, like a very solid day? Like, is everything aligning? Is everything not aligning? This screener page is really going to be where you want to kind of live. And like if you look at the IB and you look at the opening candle continuation, you look at some of these other ones, like it's based on what reports you like, but it's also based on like what's actually going on here. And if you see that the gap fill has all differing pieces here, and then you see, let's just say that the IB today all had differing opinions here, like all different, like kind of like sprinkled, which there are some of the days do have it. It becomes a lot easier to say I'm going to be cash today. Whereas if you don't have something like this, that's where you can say, yeah, I don't know. Today might be a solid day. Today could be a big winner. Today could be like a home run day where like this will tell you, hey, actually, arguably some of the most important reports here, some of the most high impact reports, like for example, the gap fill is more split 50-50. And that's something that should be a red flag.
Yeah, red flag. I like that term right there.
Yeah.
Whenever things don't agree in the same direction, those little red flags just start going up, and I'm like, I don't want to be a part of this,
Exactly.
because you've lost the edge at that point. You have no edge when the market's trying to figure itself out. That's when you stay away from bad trades. That's when flat and cash become a very, very important position to be in.
Yeah, it's I mean, the discipline to do that is very important, but you guys just got to work on it. For those of you who don't have that discipline yet, but very important. But yeah, that was a good way to.
I think that was a great ending. A great spot there. A great thought to end on. I don't know. Man, so much just alpha dropped right here this last like 2 hours. I mean, I don't think we could have asked for a better Friday stream. We kicked it off with a massive trade, and then we brought in the guy himself, I mean, just dropping all kinds of knowledge, how to use all these different things. I will say, guys, look out this afternoon. I am going to, I haven't decided, maybe I do it live. Maybe I do it live on my page, my YouTube and stuff. But I want to go through and show the screener tool and how you can build it out, and how I built mine out. And I'm actually going to clear mine and then build it live so that you guys can see it,
That's awesome.
how it's built out, because I think this is one of the newer tools that you guys have come out with,
Yep.
and this is something that I think is super valuable to people. So I want to show like how, not just how to build it out, but how I build it out and what I watch. So like I'll give a little hint here. I don't look at Mag 7. I look at the top 10, QQQ top 10. If you don't know what those are and you trade NASDAQ, you should know what those are.
Yeah.
I will go over that in the video. I'll talk about that a little bit. I think I'll just do a live stream at some point this afternoon, maybe 1, 2 Eastern, somewhere in there.
Yeah.
What time is it now? Yeah, maybe an hour and a half, 2 hours from now. I'll just watch that on my stuff, guys. But this is a huge tool, so I'm gonna make we're gonna go into this a little bit deeper this afternoon, and I'm gonna put my thoughts into it as well and show you guys how I think and look at this stuff. So stay tuned for that. Andre, appreciate you joining this morning. It's always great to have you.
Of course, it's great to always a great conversation.
Every time, I know we've said this before. Every time me and you get on, I mean, if I even jump in a meeting with you, it's like I feel like we hit business for 10 minutes and then we're like talking for 20 minutes about trading or whatever else is going on. So one of these days we're gonna have to link up in person somewhere.
100%.
That'd be a great time.
100%. Yeah,
for sure. Andre, any last thoughts that you want to leave with the people?
No, I mean, I kind of, to touch on what we said earlier, that we have a 7-day free trial. Honestly, I think you should give yourself a month to figure it out, to explore the reports, to see what you like, see what you don't like. Like, let these things actually set up. Like, for example, the gap up on a Thursday for SPY. Like, let them set up so you can go and kind of like experiment and see how these things work and tinker with things. But we have a 7-day free trial. It's not, from what I've seen, unless you're going to be really dedicated, it's not really too much time. Like, most people just kind of like scramble to figure it out, and you don't want to scramble to figure this out. This is trading. This is a longer game. You want to give yourself the time, the resources to actually be successful. And
I'm going to explode here. Hold on. Andre, when you started trading, did you spend a 7-day free trial to figure out how to chart?
100%.
Did you do hold on, when you were trying to learn basic indicators, support and resistance, even, or if you were looking at EMAs or VWAP, did you take 7 days to figure that out, or did it take months?
It's months and years.
Thank you. No one is learning to trade in 7 days. No one's learning to trade tools. You didn't learn, and most people I think that are in here are, have some base level of trading at this point, right? You didn't just do a 7-day free trial on TradingView and start charting and become a chartist, right? You can't learn anything in 7 days. Like, and this is a powerful tool, any tool. If you sign up for whatever other data service out there, if you're an options flow person, you're not going to do a 7-day free trial of options flow and figure it out.
No way.
You're not. That's not how trading works. You need to spend the time, invest in yourself. As much as we're investing in the market, right? Invest in yourself. Take the time to learn a tool fully. And if down the road you figure out like this doesn't really fit for me, hey, perfect. You tried it, right? You gave it the old college try, as they say. But at least, I would say, at least a month. You need at least a month so you can start seeing how these things play out. It took me, about a month, probably a month and a half into using Edgeful is where it started to click for me more and more. So definitely, give it a try. If anything, you guys have seen the indicators on my chart. That's worth the price of admission to get in. That's the price of admission right there. The indicators on the chart, it just make my life so much easier. Honestly, I think it's a steal that we get those and the data together for $49 a month. So my parting thoughts here, definitely don't just do a 7-day free trial on anything, whether it's Edgeful or anything else. If you're trading and you're serious about trading and you want to be profitable, you're not going to learn anything in a 7-day free trial. I'm sorry, you're not. I will stand on that
Yeah.
I will die on this mountain. You will
Yeah.
not learn anything worthwhile in 7 days when it comes to any type of trading. I don't
Yeah.
care what crash, these people that sell these courses that say, hey, this mastermind, this one weekend is going to change your life. No, it's not. Now, maybe that video is 8 hours long and you go back to it for the next month and start applying things and learning new things, picking up new things out of it. There you go. Now you spent your month. Now you've got something out of it.
Yeah.
Go back and rewatch this, by the way. This is fully recorded. As soon as I close this down here in a moment, you can watch this entire stream back. It's on the YouTube channels. It's on X right here on Wolf and Edgeful both.
Yeah.
You can watch it all back. You probably should watch it back, honestly. Most of you should probably go watch this back. Whether, this afternoon, you have some free time, this weekend, whatever it is, go back and study some of this stuff and add it to your arsenal of trading.
Yeah. No, I mean, flawless.
Sorry, I had to stand on that mountain real fast. You're not going to learn anything in 7 days.
100%.
People take years to become profitable, and most people fail right at this game. And that's where, having these tools, having these strategies and stuff is trying to help progress that along. I mean, the stuff wasn't around. Edgeful, I've never seen anything like Edgeful, by the way. But, 3-4 years ago, a lot of this stuff wasn't even around. And people, trying to learn to trade. Do not try to learn to trade in 7 days, please. Do not try to learn any new strategy in 7 days. No matter what strategy you like to trade, do not try 7 days. Give it, a month is being very generous, I think. Very, very generous at a month. I think you need to give anything new that you're trying to do. People want to change their life. You're not going to change your life in 7 days. You're not going to change your life in 30 days. Yeah, that's the point at the end of the day here.
100%. Yeah, I couldn't agree more, to be honest.
Yeah, sorry, that was soapbox was out on that one.
Good. That's what that's the important piece where people need to hear that. Like, people come into this game with the wrong expectations, and they need to hear that, and they need to know that, like, this or anything is not going to be done in 7 days. Like, you cannot do that. And, like, you need to know that it's going to take some time, and, like, obviously it sucks, but that's just the way that it is.
It is what it is, right? We can't change it. We can just adapt to it. Same with the market. We can't change the market. Things that used to work may not work anymore.
100%.
Adapt and survive, adapt and move on. That would be the last 100%. Thing I'd leave with the people. All right, guys.
All right.
Andre, we appreciate you so much. Thanks for tuning in, everyone. Next week, same time, I believe Wednesday and Friday again, right here, same place for the live trading streams. Watch my channel. So my ex, Imp Maximiliano, and my YouTube channel. This afternoon, I will do a screener video, which fantastic new tool. It's what's really sitting on the side of your screen, right?
Yeah.
There, right there. I'm going to do a video on that, how I build that out, how I use it, why I build it out the way I do. So I'll do that this afternoon. I'll probably just do it live just because Andre knows we're the same. But script is not my thing. Like, let me just get going and drop my stuff, right?
Exactly.
I don't do the script thing. But either way, appreciate everyone that tuned in today. Watch this video back. There was so much good stuff dropped in this. Andre, hope you have a great rest of your day. Appreciate you joining. Everyone, thanks for tuning in. Check out edgeful.com, www.edgeful.com. Follow at Edgeful, Wolf Financial as well. Yeah. Check them out. A lot of space and stuff going on there. So appreciate everyone. Y'all have a great rest of your Friday, and I'll see the rest of you on the stream this afternoon.